time. So 7:10 Central Standard Time, the 16th of August, 2024. Man, how time flies. Yeah, all times on my charts and that I refer to are Central Standard Time, same as Chicago, which is where the futures market trades. Just get that out of the way quickly. So this is adjusting to the school schedule now. I am in the middle of taking our daughter to school right at 7:30, so that's going to be kind of inconvenient for reports. So I thought I'd get started a little bit earlier with the pre-market, see how that works out. And I also go to pick her up at 3 o'clock or 1500 in the afternoon, which is right at the cash close. So those are some. I'm going to see how my world adjusts to that. The market today, as far as reports and numbers, is pretty much nothing. There's, I don't know, a handful of them, probably 10 varying reports, but they're all 2-star. None of them are 3. Building permits, housing starts. I mean, these are all numbers, right? Michigan 1-year inflation, that's usually a mover. That's at 9 o'clock. And Michigan 5-year inflation, and then Michigan consumer expectations and consumer sentiment. That's all 9 o'clock. That's usually a mover, but for some reason, the app that I use, which is for numbers and stuff, just has it as a 2-star rating or 2-star impact, shall we say. So 7:30, we got building permits, housing starts, Michigan, and then that's all 7:30, those 3. Then the Michigan numbers start out at 9. We got an Atlanta Fed GDP at 9:30, and then Baker Hughes rig counts and that kind of stuff through the afternoon. So that's where all of that is. The overnight was they continued the up move yesterday, pulled it back, took it up here to a new overnight high I mean, not a new overnight high, but took it up here to the high at 55.83 a quarter. And now it's been selling down. So what we're looking to do now is open lower in range. And the way the statistics work, excuse me, the way the statistics work here is that there are only 2 criteria, and it is the projected or the expected open of the upcoming RTH session as it relates to the close of the previous RTH session, and then as it relates to the previous RTH range. So in this case, it's lower in range. That would be the open type that we will look to the statistics for. When I get back from school run, I guess is the way this is going to work. So, and this is the micro composite here. Just quickly, you see where we gapped up from 3 days ago. Then we traded back and forth over it. So I was able to, because the way the micro composite works here is that these are daily RTH bars. And whenever price is overlapping, I draw a volume profile around them. This was a gap down. This was a gap down. Then what did we do? We started trading back up, overlapping price or auctioning price. I put a volume profile around them, which by definition then generates a micro composite volume point of control and value area and that stuff. Nothing here. We gapped up, so I left it alone until yesterday, or day before yesterday, when we got some overlapping price. So I drew a volume profile around that. So the current micro composite, in my opinion, is this one right here of only these 2 days, and the volume profile or POC for that is 54.58 half. Then yesterday, of course, again, we gapped way up Didn't close the gap. So we'll see what happens again. It's, you know, as Tom likes to say, market goes up. The market goes up to go down and goes down to go up. And that's pretty damn correct. In other words, it's a big auction and it trades. And that's where we are now. We're selling off here in the in the overnight. Oops, didn't want to do that. Sorry, there we go. Boop. Okay, so we're back over here at Bookmap. We're selling down here, and also these price levels are pushed directly from my RT. This is the column, which is just my notes, and I will change this because we're going to open lower in range from the looks of it. Okay, this is just for my reference, nothing else. It means nothing. This title, just so that when I look at a snap, I can see where we were. Right. When I get back, I'll input the statistics which come from the study in IRT, and they go along the associated prices here. These price levels. Usually, the most highest statistic is typically the overnight volume point of control. So now I will get ready to go do the school thing, and then I'll be back. right. So, well, we had a big sell-off on that number. Apparently, it was not as they'd hoped. Whatever numbers those were, building permits, I guess. Like big ones, big numbers. Yeah. So, see if I can get back to where the hell I was now. So we're back here at 32.17. I'll start this whole shoot and match off at yeah. So we're not there. All right. So we are right over here. There was where I left, and we sold down on that number at 7:30. Chopping around a bit down here, and I'll get back to what I was doing. So we are still clearly lower than the close and within range. All right. So our opening type for statistics purposes will be lower in range, which is what I have already tagged my title up here. So what we'll do now is we'll look at the statistics study. Have some more coffee here. I'm not firing on all cylinders apparently. And I'll show you how that works. So statistics is and I have it on this tab is here. This study looks back at 2004 days. As I said earlier, the only parameters are the relationship of the upcoming RTH open as compared to the previous RTH close and the upcoming RTH open with relationship to the previous RTH range. So higher out of range is a gap up. Higher in range, we're above the close, but we're still in yesterday's or the previous range. Lower in range, which is where we're going to open today because the open is low, or the open looks to be lower than previous close, and we're still within previous range. And then lower out of range is a gap down. Simple. Nothing is mysterious about all of this. It's just math and logic. You don't need to make any magical. You don't have to wear a pointy hat with stars and stuff like that on it. It's just logical and math, statistics and math. So lower in range. What that means is that of 2004 days, 508 of the 608 of those days opened lower in range. Of these 608 days, this is the number of days and mathematically the percentage of those where each of these price levels was touched by price action in the upcoming RTH period. So the overnight VPOC, out of 608 days, the overnight VPOC was revisited 515 times for 84.7%. Easy. We go over here to the overnight point of control, which is up here someplace, here, and it is 84.7. And that's all there is to this. And actually, this is a little bit off here between Bookmap and IRT. Whoa, that isn't what I had in mind there. Let's start over. 84.7%. Boom, there we go. And then I will do that for the rest of these. Previous RTH high is somewhere. Around here. I don't see it yet, but I'm looking. Previous high is 38.2% of the time. So they don't think that there's a very high likelihood that that's going to happen. But what does that tell you? That right? Oh, can't be. Previous high low. Mid value, previous low. Sure as hell. Previous high is 38.2%. Wow. That doesn't make a whole lot of sense. And I'll show you why you have to take these statistics as suggestions. The previous high is 38.2% that we will revisit the previous high. But the overnight point of control is 84%, and they're just a couple of ticks away. Which one do you think is going to happen first? And here's price down here. So these are at best suggestions. I want to try to get this down here where I can actually do this. There we go. And here's the overnight high, which is 74.5% of the time. In a minute, am I on the right deal here? Hold on a second here. I'm not. 51.2. 51.2. I want to relook at that previous RTH high and make sure I was not in the higher end range call. Yeah, sure as hell, 38.2. Well, I guess I could actually show you that. So here is our column, right? Lower end range. And there's the previous high. 232 times was that hit for 38.2% of the time. Pretty crazy. Previous close is right here. That's 72.7% of the time. And that's right there. And let's see what else we've got floating around over here. Well, those are some pretty good numbers. Oh, where's the mid? Typically, the overnight mid is the second highest probability, and in this case, it's 83.2. And where do we have the overnight mid? There. Percent of the time. Well, so you see, it's a little bit, these numbers make a little bit of sense. This one is completely random. And I keep thinking I've made a mistake. Previous RTH high, it just seems ridiculous to me, but it is definitely the previous high is 83 or 38.2% of the time. Now, we have some statistics which some people incorrectly refer to. For example, the IB stat or the overnight high-low stat. Look at these numbers, 98.2% of the time. That says that after the IB is set, which happens at 9:30 in the morning, because the IB is just the high and low of the first 1 hour of the RTH period. That's session. That's all it is. So 98% of the time in the balance of the RTH trading session, the high or the low are revisited or taken out. That's a huge percentage. Similarly, 93.9, the overnight high or low is taken out. But when you look at the statistics, the overnight low is 67.8%, and the overnight high is 51.2, right? So what was that? What did I say the overnight low was here now? 67.8. Let's go wander over here and find out while we're at it. And obviously, it's going to be right under here, and it's going to be right there, and it's going to be, oh, shoot. I didn't clear these columns after I restarted. That sucks. I'm not going to start over here. I had to restart my book map this morning because Rhythmic had dropped out. What is 67.8%? And I need to get rid of these statistics. I typically clear this column right here, and I did that. But when I had to restart Bookmap to get it to load from the beginning of the day of the session, I did not save it when I closed it. And so I'm going to be struggling with stupidity all day here. That's really annoying. I guess the way to do it is just do it correctly the first way. There we go. Boom. Now we start over. Okay, the overnight high is, well, let's start with the beginning. 84.7 is the overnight VOC. Damn it. I'm not firing very well here. I apologize for that. The overnight high. Low. The high went someplace and I don't see it here. My eyes are getting so bad staring at these screens all the time. 51.2% of the time. I'm here an average of 15 hours a day. I start about 6 and I usually end around 9:30. So, and as the old saying goes, I ain't getting any younger. Previous RTH high, the previous high, which is that one that's been puzzling me all day, is 38.2% of the time. 38.2. I guess I'll get back over here now. So what I've done is cleared these out here because I had forgotten that when I resaved, it didn't work. I mean, I didn't save, but the RTH close, previous close, is 72.7% of the time. And let's pick up something else here. Let's get the overnight mid, 83.2. And where'd that overnight low? Go. 67.8. All right, I'll look at some of these other levels when I have a bit of time here. Now, note about some of these other columns. This is the high time frame column where I manually enter significant levels from the micro composite profile, micro composite chart, which is this one right here. I've talked about the micro composite earlier in the stream, but it's simply RTH daily bars. And where price overlaps, I draw a volume profile around it. And then these green lines are the high volume nodes from the volume profile, which are pushed directly to IRT. This is the volume profile VPOC, MCVPOC, which I enter manually. And here was yesterday's lone wolf out there, the island top. So let's get back over here. And I can show you hopefully where some of those are. Here's some, this is a previous MCVPOC, which was once we're into a new MC, I change the text to black until it's taken out, and then I pretty much get rid of it. This is the micro composite high. There's the micro composite VPOC. These are the high volume nodes, which are automatically pushed. Now, this column is the full session volume profile starting at 1700 last night. This is the RTH volume profile, which will reset at 8:30 this morning. This is the cumulative delta for these two, for this one. And this is the chart volume profile, which just plots what data you have visible on the chart over here. And then I've already talked ad nauseum about this column and the cloud nodes, which is pushed directly from my RT to map. So let's just make this 47 here. Get rid of that one. Try to keep my timestamps up to date. So the levels, there's nothing magical or mysterious about the levels. The same applies as statistics. It's just math. The IB high and the IB low, as I pointed out, are just the high and low of the first 1 hour of the RTH session. That's all. 9:30, they're set. They don't move anymore. The POCs, also not mysterious. I have two. Now, I have two POCs, I have two VWAPs, and one mid. And the way it works is I have an ETH VWAP, which is this one right here. And I have a full session or a RTH session VWAP, which is right there. Okay. I have a bright yellow POC, which is the RTH, and I have a muted yellow POC, which is the full session. POC is nothing more than the price at which the most contracts have traded so far in the session. So 73.5 is the price at which the most contracts have traded so far in the full session, starting at 1700 last night. And oh, lo and behold, look at here, 42.70, 40, 41.85. And you see, it doesn't take much to move. This is 41.85. This is 42.70. If this goes up here 100, if they trade 100 more contracts at this price, the price is going to jump up to that level. That's all there is to it. Same here. The VWAP is a calculated indicator in a sense. It's the volume weighted average price. I have no other indicators at all on my charts or either IRT or bookmap. The levels, so we have POC, VWAP, and this is the mid of the RTH session, period. And the IBs, that's it. Then these price levels, these flags are pushed from bookmap, from IRT, as are the corresponding lines. And they're both driven by the same IRT data. Now, one thing that's kind of anomalous here that needs to be, perhaps might be confusing, is this cloud note column. I enter the URL from my machine, which pushes the data from IRT to bookmap. The lowest refresh rate I can set in that window or that setup for the cloud nodes is 1 minute. The people that built this indicator over here or app that I bought from bookmap that draws the line at the same place as the flag and uses the same data, their refresh rate is about every 30 seconds. So what often happens is the line will move and then the flag will catch up about 30 seconds later. Perfect. There's nothing I can do about it. And frankly, I, recognize what it is and it doesn't bother me at all. So who cares? There you go. The heat map over here, these liquidity levels just are a graphic representation of the resting liquidity in the dome or in the book. Okay. Talked about the micro composite. I've got these all out of whack, but I'll just leave them alone. To hell with it. Now, one thing we need to do is get ready to trade, right? I'll activate the multi-brackets, and this is my 2-lot setup. Let me just make sure I have this timestamp so that Try to get kind of back on track here. 52. This is real annoying. I don't know a way around it. If somebody does, I'd be forever eternally grateful to have this automatic somehow. Anyway, you have to have these timestamps for these really long streams. Otherwise, it just crazy. Anyway, this is the 2-lot risk neutral package. You can trade as many of these packages your account allows for, your risk tolerance. What it is that the stop for both contracts is 12 ticks. The first scale is at 12 ticks positive. When you've reached this first target, or T1, the trade is risk neutral. There's no way you can do anything. The worst you can possibly do, let me rephrase that, is scratch, unless you're a complete moron and you move your stop away from entry. Then my runner here is at 48 ticks. So that is now set. However, you've got to go over here to the dome, and you've got to activate the trade control panel, and it's activated, okay? I initiate trades with the keyboard, and I manipulate with my mouse. Now, and the reason I have it set for dome is the following. If you use chart or both, anywhere in this active data column, which is where you don't see any historical data or bubbles, and it's inside of this line, you notice how the mouse changes to notice how, sorry about that. I think I just did that whole thing on the wrong deal. Let's go back over here and start over. This is the 2-lot package. This is the trade control panel activated like this. That's the dome, which again, this is chart. I leave dome rather than chart or both. This is the active data column. And if you have chart or both selected, anywhere in here you click, you will have initiated a trade, whether you wanted to or not. Obviously, I've made that mistake a couple of times by trying to move a target, let's say, and unintentionally gotten inside this line and even if you try to grab the line, it'll enter a trade at that point if you're not on the wrong side of this line. So I just eliminated that problem for myself, and I set it at dome because I initiate trades with a keyboard, so I can manipulate targets or stops on the dome, and that's perfectly fine for me, and it eliminates the possibility of error over here. If you trade with a mouse, well then, good for you. One caveat to trading with the keyboard is you've got to have the app, the Bookmap window application with focus. Otherwise, you'll be slapping keys upside down and back and forth, and nothing will happen. For example, if I was doing something on IRT or typing on this on the timestamp thing and saw a trade and tried to hit a keyboard entry, it wouldn't happen because the focus is on that other window or other application. The focus has got to be here to have the keyboards work. All right, so this is set. I think it's clear why I used a dome. Turn that off because I never look or trade P&L. I trade ticks, and I think that's good advice. One other idea that's important about the there's a lot of important parts about the trade plan and risk management, but I have a real important criteria in my trading plan, which says that I have to have an unobstructed path to the risk neutral or the scale or that first target of 3 points. So, for example, if I wanted to, for whatever reason, I wanted to trade from here up to this mid, I got the scale off. Sorry about that. I have to have a clear 3 points. Okay? It's just that simple. I guess I don't need to make some example about that. And I've got this. One of the things with Bookmap that I find is I have to make sure that I have these grid lines visible at about 50 cents here. Otherwise, I don't have perspective for scale. Now, here's a better example. If I was at IB this IB high, which is from previous, and I was going to target the value area high or the mid, or the mid up here or the previous mid. I couldn't enter that trade because it's not 3 points to this first obstruction or obstacle, which is the value area low in this case. So I think that should be clear. Yeah, and one other thing I think that's probably important to say here. The purpose of the stream is my virtual journal. I continually narrate or, talk so that when I review these, I can hear what I was thinking. Obviously, I can see what I was seeing by the video, and that's the purpose of the stream. I have a commitment to myself in the stream in the interest of transparency and accountability that I will take no trades this account off stream. And I have yet to do that. So that's, I think, important. The reason for the timestamps and that's the reason that the streams are so long is because I start them before the market, and I don't want to see a trade develop and not be able to take it because I haven't got the stream running. So it's a double-edged sword, and I'm not sure what's the correct way to think about it, but that's where I'm at right now. So the purpose of the stream is my virtual journal. Now, Bookmap very, very beautifully and seamlessly records everything that happens while you have the program open. Orders, moving targets, any of that stuff visually. And you can see it all on replay, which is pretty cool. But it doesn't record the audio. So it leaves out the what was I thinking part, which I believe to be real important. And when you review the stream, sometimes I'll go, what the hell was that? What did I just say? Did I say that? It sound like a newscaster. Did he just say that? It's amazing how your emotions and things can affect what you're doing. All right, now, I think it's time here that before this TLab post, that I can post the my opinion of what trading as a business is. And this is probably the holy grail, the most important message that I have become aware of or realized, and without a doubt, trading as a business, a continuously profitable business. It's not a video game. It's not gambling. It is a business of statistics and probabilities. What does that mean? That means that everybody knows that the market is a random environment. The probability of the next trade is always 50-50, i.e. it's a random environment. So it's impossible to predict where the market is going to go in short term, maybe a little bit less so, better chance in the long term, but in the short term, it's impossible to predict. So you can only anticipate. What you need to do in that regard is you need to determine and vet or calculate statistically whether a particular setup and the exact parameters have a statistical probability or edge. And the way you do that is you determine what setup it is you want to vet. You come up with the correct or the specific criteria and trigger, etc. And then you capture a statistically significant data set of that exact setup and criteria, and you need about 50 samples of that to be statistically significant. You calculate mathematically at that point on your data that you've captured whether there's a positive edge or not. if there is an edge or a positive probability that, for example, you're going to get your scale every time, or you're going to get your runner, however you capture those statistics, then your job as a trader is to take each and every one of those setups and that present themselves properly. And the law of large numbers will manifest that edge to your account. That is the business of trading. It's not just me saying that. Jim Simmons, Tom, Mark Douglas, pick one, pick an expert and listen to something that they've said about trading and how they approach it. And it's always the same. That is the business of statistics. Some advantages to that are nothing's a surprise. If you have a vetted edge in the IB statistic, for example, you know very well in advance when that's starting to set up. You see the edge, you see the setup, then you watch for the criteria, then you see the trigger and you enter the trade, or you don't. Simple as that. It's not a surprise. Nothing is spontaneous or gunslinging or gambling or any of that kind of stuff. It's almost it's a mundane, almost boring business of statistics where you watch for a particular setup, and that's why algo and high speed or high frequency trading is so prevalent and works so well now. Is because they have worked out the edge, they worked out the criteria, and they programmed those into the computer. A computer didn't figure that out, men did, but that's how it works. And I don't need to tell you that they're profitable. Goldman Sachs, I don't think it's had a losing day in years. Also, if that business model sounds familiar, it is the exact business model of gaming from the point of view of a casino. They don't play any games that they haven't predetermined a statistical edge with specific rules, and their mission is to deal as many hands at 21 as they possibly can. If a guy wins, a gambler wins, congratulations, Screedle Dink, you're a big winner, and deal the next hand. The pit boss doesn't run over and change all the rules, nothing. They just keep dealing it. The mission is to generate as many examples of that setup and criteria as possible so that the law of large numbers exponentially grows. And it's pretty obvious how much money casinos make with that. I think there's only one guy in history that's ever bankrupted a casino in Atlantic City, but that's a different story. So that is trading as a business. And in my opinion, basically the real holy grail of trading. So there you have that. Now I will get ready for the TLab post, which I do every day at 8:20. And what that is the TLab is a bookmap Discord chat room called the Traders Lab, started by a guy named Tom B, or he's the guy there. It is, in my opinion, the only one of those kinds of rooms, chat rooms, anything like that I would recommend. And for the following reasons. First of all, it's completely free, and you don't even have to be a subscriber to Bookmap to participate. You do have to, sign up for their Discord server, obviously, but you don't have to be a subscriber to Bookmap platform or anything else. Nobody is trying to sell you anything. Tom is not he's an educator, but he's not trying to sell you mentorship. He doesn't have any indicators. He doesn't have a website, nothing. He does it out of his altruistic attitude that he's trying to help new traders become better traders. And he is an experienced professional, very successful trader, and been at it for 45 years. It's really, truly a pearl in the garbage as far as I'm concerned. So there's a link to that in the description above all of the usual disclaimers here for this website. So it's the Traders Lab. It's a Bookmap Discord chat room. So however you want to get there, I recommend that's a good idea. All right. So, and in regard to that, I'll buy a break there. Sorry. In regard to that, every day I post the reports on the upcoming numbers early, about or a little after 6, and then about 8:20, I have a special post that I make to the TLab, which shows all the levels and everything. For those folks who don't have IRT or some sort of package, which they're able to get all those levels from. But Panda, my cat's over here telling me off, one of them. This is that post. It's just got all of the RTH and ETH sessions with their respective numbers and naked volume points of control, and then all of the specific numbers up here and where we are over there. And I just take a snap of this and post it to the TLab every day at 8:20. So I'll do that in a couple of minutes here. And then we'll be ready for the open. And I would suggest that we might have another market moving number at 9, the top of the hour, is my opinion. Okay. Turn that off. Okay, where's 8:20? So we have our stats in there, or a lot of them. There are stats as I showed in that deal for, and that's on the study for all of the price levels. But I'm not sure that it's applicable or that they have significance. Okay. All right. There we go. And there's the post. And there's my post in the TLab. And there we are back at RT, and get back to the business at hand. At the open, I'll set these from full session to RTH, and that's real tough. Whoops, wrong. Focus on the wrong chart. Sorry about that. Focus on, here we go. God damn, come on now. Wrong button. Here, the comma. You just select that. I have this. All of my charts are set up for split session. And you can set the sessions numbers to the times. There's IRT is pretty complicated, pretty complex, robust program. So what happens at 8:30 is I just hit that and changes each chart. My charting is pretty simple. It is, what the hell is that? Oh, I already changed. I didn't want to do that. The charting is pretty simple. It's the ES and Co. NQ. This, as I said, is a micro composite. It's daily RTH bars, and this is the ES, and this is the volume profile. Oh, there you go. All right, now see what the hell happens now. Okay. Now we'll have a open, which will be at about 112, 22, and 8. So it's going to be about 123 in. So I guess I'll be pretty close here. Just doing the math. With OBS on these timestamps, you have to do it with reference to the time of this stream, not the time on your clock. So that's something. Okay. Get ready here for the Wump and Willow open. Again, I am expecting that the Michigan consumer sentiment numbers and 5-year inflation, all the Michigan numbers typically are market movers. For some reason, the application or the site that I use for numbers doesn't show them as 3-star, only 2. But you watch and see what happens at 9 o'clock. And I think you'll discover, I think we will discover that it is a market mover. So they've forced around here in the overnight, traded it up, traded it all the way down 40 handles or so. And now they're just goofing around in value, whether they're in or whether they're not, from yesterday. And we're going to open here in 5 minutes, so it's going to be about 120. Yes, we'll call it 120 over here. Stream time. Once we have the open, I will start to flag the migrating VPOC. I do that by just wherever it happens to be, throw this flag in here, like this. And what that does, obviously the yellow line continues to move and track just as it does in IRT, the migrating or the developing VPOC, but it scrolls off to the left in Bookmap. So it's handy to be just like, name of this column is a handy, memory jog. It's handy to be able to see those flags here to know whether you're approaching a previous VPOC or not, because many times during the day, price will go back and revisit the previous volume point of control. Is it still, Tom talks about it always in terms of a shopping, experience at the grocery store. Is it still too high? Goes back down to a big level. That's price check at aisle 3. Is it still too low down here? Okay, trade back up here. That's accepting the principle that market is continually looking for value. I think that it's more of a speculation environment where these guys are. I don't think anybody trading right here could give 2 hoots whether that's a fair value for the ES or not. What they hope is that they can either get somebody offside and take it up or take it down and profit off the other person. Because remember that trading in the futures market is a zero-sum game. For every buyer, there's a seller, and vice versa. So it's important to remember what the hell happened here. I want that to be the case. What happened? It'll happen to my OBS. There we go. 2.5. Jesus. So pretty quick. Or, you know, here's a perfect example. They trade down. They get them off sides, 26 out, and boom, up they come. You know, a bit of exhaustion. There was 95 stops out, and then 29, and then they just run it up on, you know, on basically an order cascade of buying or stop run. All these guys that were shorting here, looking for lower, got their stops run over going up this direction, having nothing to do with the value of the S&P 500. And the futures are by and large a hedge for options traders, as I understand it. The options world is something I don't understand very well. But the purpose of futures are, originally futures were developed for the commodities markets, for real commodities people, you know, farmer in Iowa or where I grew up on a cattle ranch cattle and horse ranch in Montana. You could buy beef or cattle futures if you thought the price was going to go down when your herd or your stock was going to go to market in the spring, and say spring of the year, if the cattle prices were high, you could buy futures. Or sell futures, depending on which way you thought the market was going to go in the fall when your steers were ready to go to market. It was a hedge, right? And that's how the futures market. That's why the futures market exists. And then speculation got involved, the locals and all that shit. And here we go. And now you see the developing volume point of control fly down here and pop up there. And I'll enter that first one. The other one was too quick. And back down here again. Oh, what a miracle. How'd that work? Why does that happen? The fluctuation of the VPOC is real erratic at the open because it takes so few contracts to move it. Here's 1474 and here's 17. So 200 contracts is going to change, right? Remember that it's just the price at which the most volume of contracts has traded so far in the session. That's all. So that's why it's pretty erratic at the beginning of a session, because it takes so few contracts to change the location of that VPOC. And what are we doing now? Okay. I will now switch over IRT over to the RTH session. And the hell that even went, I don't know. Come on. Get over here. Stretch that out a little where we can watch it happen. What I'm doing is just adjusting this stuff around to be able to see here what's going on. I have them now at full session, at the RTH session. And the full session VPOC, which is this one, has now migrated down and joined. They're both at the same spot, 2,916 contracts, and so far from overnight, we're at 4,290. All there is to it, just math and volume, you know. And we got that Michigan stuff at the top of the hour. So, And here we have our IB starting to move. This is the high of the first 1 hour so far, and that's the low of the first 1 hour so far. And now the high can, starts to move up. We've got that mid up there above us. The overnight mid, sorry, up here above us, which is a pretty high stat. And looks like they're going to continue to chug up. Typically, there's an opening swing high, low, and that could be what we witnessed right here. Swing high, swing low, and now trading up, but you never know. These first couple of minutes are a lot of people get spanked. A lot of people get spanked. Looks like we're going to be able to draw another volume profile or a micro composite because we've opened pretty much smack in the middle of the, or definitely within the other range, not the middle, because we're down around, we opened near the value area low. We opened here, closed there. Technically, there's a gap. If you look at close open gap, there is one. There's not a gap on range at all. Some people think that do that. Some people don't. See how there's such a volatility on these micro composite on the VPOC migrations. Oh, what have I got going on here? Well, I've got 50 cents spread, which that's relatively reasonable scale. You can see how our full session is so much greater. And here's the beginning of our RTH session, as indicated by the IB high and the IB low. So there you go. There we go. It's a little easier to see the reaction of the IB to price when you look at IRT. Here, the green lines are the IB. I try to keep the colors consistent so you can see where we traded. Well, here was the open, then we traded up, traded down a little further, back up, a little further up. Now we're in between those two. So you see how they widen that out. And these will continue to migrate like this and following the high and low of the session until 9:30, which is the first hour, and that's when the IB sets. There you go. I don't think I have any meeting type commitments today. I better go look. So we have these statistics above us that overnight mid, Lobeck's VWAP are on top of one another. Pretty much flatline here, just a rotation. This is open auction, a tight open auction, as opposed to opening drive or whatever else. I would suspect that here in a minute they're going to all these guys that were so excited about a long, they're going to probably spank them and take their stops out, because you can imagine that all of these people here that have been trading, looking for higher, have been flopping their stops all along these levels. Think like a retail trader, don't trade like one. That's one of Tom T's. That's a Tom T-ism, and I think it resonates well. So all of these guys have been putting their stops down here, and that means there's a buttload of fuel down there. And at some point, the big guys that are selling to them all are going to go, thank you very much. And then they're going to go down here and go, thanks for playing. Thanks for coming out. That's what I think is going to happen. I mean, that's how I think the market typically moves. Here's my wife out there talking to somebody. I hope it's to herself and not me, because I'll be in big trouble if I'm not out there front and center. So we have basically a tight open auction, slight skew to the upside. We opened lower outer range. My thinking that we will trade higher is because we've got our Globex volume point of control and our overnight mid up here at 83.2, and we've got the overnight VPOC above that. Also, what? Yeah. Let's wind this down a little bit and have a look-see up here. And then also here's the overnight close and settlement. And somewhere way up here is the overnight volume point of control. This is that only outlier that's so goofy to me. I don't know. I'm not sure. I'll think about that one. Why that goofy stat would be there like that. So this is a trap that I would often fall into. First of all, there you go. They got something up there. And likely we're going to push up to this overnight mid, which is 83.2% probability that level will be taken out. Doesn't qualify at this point for my 3-point range, because we're within that 3-point range to the target. So that's important to remember. But I'd say we will undoubtedly get up to that level. Might test back down here to our existing RV high. So we have this open auction where, and as I pointed out, lots of fuel down here, but equally fuel above it, which is what these were. These were short stops, right? These are all these people that were thinking we're going to fall through. These are those stops. And now we're going to get this stat out up here. And then we have the previous close, and the big one is the overnight volume point of control, and also the overnight higher low. Those are two of the higher probability statistics that are discovered in our statistics study. Yeah. So now, was this pullback a get on point? Okay, it qualified for the 3 points. There we are at 3 points. We would be scaled. and we would have these statistics above us, which is good. We do have a considerable liquidity sitting here. You can see it resting in the book over here, and you can see it represented. A handy thing about the book map, heat map, yeah, that's right. You see where liquidity came in and if it lifts off, where that happened. The only anomaly that's happening lately in the last month or two is this goofy algo bracketing bullshit, which starts about 10 minutes to 7 every day. And that's a whole other story. Listen to any other stream. I complain about that. I complain about that a lot. It's just annoying. It is all, and it's a question for me. Now you see how the liquidity increased from here to here. Typically, you can have this higher, right? But it's a little bit. I mute it back to get rid of this bracketing algo thing. Maybe that's. Maybe that doesn't work so good, but I think it's, that way it's not so glaring to me, and I can still see the liquidity. We've got this fuel living down here. Got to discount all of this, but this is pretty normal, and we've got this one up here, which just got in there at about 842 and exists. So they didn't trade through it; they traded up to it, and they got an iceberg here, 4. Now we're pulling back to the developing value area high and these current mid VWAP. Remember that the VPOC is below us. Both of them are below us. So if we enter a situation of mean reversion, which is the most prevalent price action type, if we enter a look and see here what I'm thinking. If we enter a situation of mean reversion, which is outside in, that is the most prevalent trade price action in markets as opposed to trending. Now, here's a quandary for me because we have mid VWAP and then a significant target above. And but we have a POC below, and everybody knows that retail traders put all their stops below the POC or mid VWAP. That's a common thing. So it's hard for me to take a long here until we've come down through the POC and taken out those stops or tested that area, and then to go up, even though I'm probably wrong. And it's probably, we had that full session volume profile migration right here. Very, very well may go up and hit these targets, but it's hard for me. I'm perhaps way too cautious, but it's hard for me to get involved in that. Now we have a VPOC migration. So this could be a long situation because we've had a VPOC migration up to here. And again, I want to refresh my conversation or hearken back to my conversation about trading as a business and what that involves. And that's in about an hour in. And I am working on vetting or properly capturing those statistics, which are so important in my opinion. And, we tested down below that. We took out 46 stops right here. But the quandary for me is this is also diddling in the middle, right? The POC is the mean right now, and it is the most traded price. So what do you suppose is going to happen here? That is the whole theory behind mean reversion. It's the most traded price, so that's where price most often reverts to, as it just did there. Oh, popped up there. Everybody got excited for this move higher, and here we are back at the POC. And it's like it could likely trade below it and then back above it again. So far, the POC is just kind of sort of maybe a little bit migrated to the north. Some structured trades in the TLab are VPOC migration, which is a great one to be able to identify, because how the hell do you miss it? The setup is plain as the nose on your face. I'd love to take this trade. It qualifies for my 3-point range. It looks to me like we're trading in a tight consolidation, probably looking for that 9 o'clock number, I guess, would be my guess. And I'll likely miss an opportunity here, but since it isn't a vetted trade, which I would then, my job would be to absolutely take every one of them, I find myself in a much more of a quandary as to whether to, or I spend way too much time probably analyzing, analysis paralysis by analysis or whatever. So if I'd have gone long right here, but I just can't take a trade right off the POC. To me, that's just not correct. That's gambling. That's don't diddle in the middle. That's like the oldest law of, I think it's in the Bible, probably. Yeah. That's not to say that we're not going to go up there and get those statistics, but at this point, I would consider this to be a breakout trade. And for me, a breakout is a breakout trade is an error type. Several of them, but in my journal, breakout is an error because I relate to it as FOMO. Now here we are taking that stat, boom. So there we go. And likely we'll get the close and then the overnight VPOC above us if they continue to move. And they may well do so. So frustrating. So frustrating. That's why this is another reason why it is, in my opinion, so important to do the homework, vet the trade, and take every damn one of them. That's what I'm trying to do. But I've had to revert to teaching learning Python and a bunch of other stuff so much so far. And I still think I'm going to stand by for the Michigan number. I think this is, in my opinion, just speculative trading around that Michigan. Waiting for the Michigan number, and I could be completely wrong, but there you go. So back to the break errors. I have several error types which I record in my journal. Execution error, FOMO, and breakout is one of them. I realize it's a viable strategy for a lot of people, but for me, I find it is always a symptom or result of FOMO, which I try to recognize in advance and be proactive about. You never get over emotions, FOMO, which is fear of missing out, all that stuff. They never go away. But what you have to do is learn to recognize them and not act on them. And that's real important. That's probably one of the biggest killers to most traders, I think, retail traders anyway. That and not having a trade plan, which is essentially, predefined discipline, like my 3-point range requirement kind of thing. Now, this is a situation where we're probably going to trade up. And for sure, if we get a positive number out of Michigan, this thing could go blowing up the top. And I just don't know how to get on that, frankly. If I were on this now and we're scaled, wonderful. And that's one of the fantastic parts about the risk neutral situation is that first you anticipate where the trade's going to be after you've gotten your homework done. So that's not emotional. B, the minute you have that risk neutral scale off, all pressure's off you completely, and you can focus with clarity on trade management or anticipation of the next setup that's going to present. It's really a big deal. I don't know how to express that. It would be better for me to be able to be expressing these theories with a lot of positive trades on, I know. But I'm trying to be extremely diligent and about my discipline. And I've had experiences when I first started trading back in 99 where I didn't have any clue what the hell I was doing and trade a couple hundred trades a day. Blew up $100,000 account, so it's a big deal for me personally to be disciplined and aware of my feelings and emotions. That's why I've come up with this. I recognize that I would anticipate and hesitate, I guess, looking for confirmation that a move was going to happen, but find myself at the breakout point. That's why I have determined for me personally, that I've decided to call that an error, the breakout error, and it's basically another way for saying FOMO to me. Not everybody. So, trading is personal, that's for sure. And what works for me may be the totally wrong thing for you, except the basic fact that trading as a business of statistics and probabilities is absolutely the truth for everybody. There might be some whiz bang that comes online and, gets lucky for a string or something like that. But invariably, they will blow up if they don't have a proper trade plan, properly vetted trades, and treat it as a statistical business. Even professional gamblers work on statistics. They don't just gamble. They are counting cards or whatever the hell it is they do. I don't know, but that's all trying to skew the edge or obtain some form of an edge. That's the whole thing behind it. So we got 4 minutes to the Michigan prelim. And of course, if you have a little money, you can pay money to somebody and you get that prelim number in advance, which is pretty, whatever. No comment. So I have focus. I have the app in focus. The keyboard is set up. The brackets are on. There we go. If something happens in this number, I would be ready to go. And I don't know what's going on over here, but something is. So I'm going to be kind of disappointed if I didn't take this Michigan number for my new little number strategy that I'm working on, but I can't do it in the middle of the day. I need to change accounts for it, and Bookmap doesn't allow me to just do that. My IRT does, very simply. I can just say what account, just select which account I want to right on the fly, and it'll just start pushing the stuff there. Bookmap doesn't do that. That I've been able to figure out. Anyway, it'll start all over. It'd be handy if they did that. I'm going to have to investigate that. I'll probably ask somebody in the TLab here. So 1 minute, I'm going to bounce out for a bio break. Be right back. Love you. Okay, so the Michigan numbers coming out here. I will try to put that in. Where am I? So it's going to be at about 51. Okay. There we go. So there's that Michigan prelim. We're over that. Probably going to just launch. That's one of the things about numbers. I have this statistic I was talking about, which I'm going to do, and if once I have got it proven, I do try it out on the stream. I've tried it out once already. I'll make a special thing about how I've calculated and do all that stuff, so that's not a problem. But numbers are typically the reason not to trade them is there's no possible way you can control your risk. This is fairly muted. Okay, there's the number out. It's traded up about 4 or 5 points. It's been jumping around a lot. We've got some stops going out. We have a few icebergs hitting. We got way more buyers coming in than we got sellers. So one would expect they're going to get up to this, our probably the close and the previous high and VPOC, etc. But yeah. Yeah, but it could be they could suddenly pull her back here. Interestingly, no sellers, which is these are delta bubbles, by the way. So if it's predominantly one way or the other, then that's the way the cookie crumbles, so to speak. I don't know what to say. So this pullback would have been an entry. Let's see if we get another one. I don't know. Back down towards the IB. Well, this is the new IB high. Now there is an IB. I mentioned the IB statistic about the first 1 hour. A fellow named Rod in the Traders Lab has done some math, and he's a coder, sharp fellow and a good trader, where he determined statistically that the high or low of the first a half hour is taken out 90-some% of the time, or extended 90-some% of the time by the high or low of the second half hour. They call that the IB30 statistic, as opposed to the original one. And then the old original one they call the IB60. So those are the TLab variations on the IB. I'm just hesitant here that they're not going to pull the plug on this thing and take it down. Remember, we've got the Globex VWAP, the mid VWAP, POCs all below us. We do have these statistics above, which are juicy, but I'm just a little hesitant to get in here. And this would not be a structured trade. This would just be like a long on a pullback, which would essentially, this one would have qualified. Here's another one coming up. See where that turns out. And of course, all that matters is you get your scale. Once you get that risk neutral scale off, excuse me, get all choked up talking about making money here. A risk neutral scale here. It's a walk in the park. Now we're at 63.5, 66.5. That qualifies for our range. I'm getting out of that qualification here now. Ahead of these levels, ahead of these obstacles. And here's that thing I was worried about. So, right now, if you took that breakout idea around here somewhere, you were stopped out and you're all kind of bummed out about life in general. And I'm thinking that this is still bouncy on Michigan, and here we are back to this original pullback that, some of the other guys got in on. Might have been it there. In a sense, there's exhaustion, but you didn't know it was exhaustion until you got up here. 23 out and 1 out. But that's, where's the trigger? This little thing here. And then here we come back down to it again. So this pullback down here could be a better idea. I'm thinking they're going to try to take it down into this, whatever the hell that is, the mid, overnight mid, and Globex VWAP again. About half tempted to put a trade on, even though we got to get down to this low again in order to have that be justified in terms of my range. And now that's off the table. So he who hesitates is lost. So the saying goes. Okay. Disappointing. One of these numbers one of these pullbacks was a get on long and see what the hell happened, and now you were scaled and you're thinking you're a pretty clever boy. And now what I start doing is thinking, breakout, right? Just think, oh, FOMO. And that's the problem. That's the problem. We're building a consolidation up here below this number. So 65, 67, that's only 2 points. That's not enough. We got to be down here around 63.5-ish, where these previous pullbacks were, in order to have gotten scaled and be risk neutral. So I will not be doing that. And I've thought about putting in a resting limit like here. But what happens if you suddenly get a sell-off and it's heading down here, you know? That's now you're in and stopped out because you had a resting order sitting there without really watching market action. And here we have continual selling, and we don't have any buying. So, you know, is this the low? How low do we go? No. Understand? So you see, it's not as easy as it looks. Down to that, I would guess here. And we're developing value area low is also, or high is also right down in here. I'm tempted to go long here, but I'm not really seeing a form of exhaustion. And they're trying to take it lower. It looks to me like the sellers want to get it down around that developing value area high. About half tempted to put one on here. Price action is all selling right now. However, I'm not seeing any buyers. Very little stops coming out on either side, which is kind of weird. No, these are just suddenly getting really weird here. Don't know what to think about this. I don't have a vetted trade here. How could I? And now they're going to trade up to where we would have been in almost to a risk neutral scale from 61-ish. And I guess that's where the element of risk comes in. Any long I would have taken down here would be scaled. But with these levels, there's got to be fuel down there. I would prefer to see them trade through it, even down through the mid, to run those stops. So we'll see. This guy keeps talking about stuff, but I keep forgetting. Yeah, he's on the NQ. I just seems like there's a lot of light traffic here. Any one of these areas would have been a pullback, get on or long, and scaled. Well, not all of them, but you know that one would have scaled. But there doesn't seem to be a lot of follow through at this point. And what are we doing here? We're just kind of trading this area below the previous close. Seems to be a pretty substantial line in the sand there. And we're in a, if you look over here, this is just a consolidation, right? A zipper, as Murad, FT 71 Murad Ascar would say. And sellers coming down, overnight VWAP, developing value area high. Again, but this goddamn bouncing around here. Sorry about that swearing, but sometimes it just expresses how I feel. At 62 breakout. The more it chops around here, in my opinion, the more likely, or the higher the probability, and that's stupid to say because the probability is 50-50. But, the more it chops, it's a 50-50 chance to go either direction. Now, why would they want to go down? Why would they want to go up? The NQ is trading higher so far than the ES. Yeah. I'm going to be pretty disappointed when it just takes off and goes rocketing up there. But I don't know. I don't know whether I'm too cautious or whether I'm being intelligent and reading the market. That's if this, then that. If not, then what? Okay. So if they can't get above here, I'm looking for them to get down to this low volume node here somewhere and developing value area high. And if they don't do that, they're going to be going on without me. And that's for sure. This kind of a consolidation here is a real dangerous place to be. And what are they trying? What are we doing? Are we coiling up for a move to the top, or are we going to turn around and hammer it to the bottom, which happened day before yesterday, by the way? Now off that 3, we're approaching the scale, right? There's your risk neutral scale, and looking at the numbers above. This is where I start getting triggered for a breakout. Oh, I missed it. Oh shit! Right. This is probably that's probably the get on. 52. And once you're scaled, again, as I have said about 1,000 times, that emotional problem is over with. So it's a true pleasure. Now I have to start rethinking what my analysis would be at this point. Settlement is also a pretty big deal in the futures market. Obviously, that's yesterday's settle. Yeah. There's a quote from Tom, current at the moment. I got taken out on ad after scale, but back on and scaled, now holding for the yesterday's high, then overnight high, not a recommendation. This can rotate here and take me out again. Not a recommendation. He says that too many times, but anyway, I'm trading this upper balance at the moment as mean reversion. I'm not concerned about outcome. I cannot control that part. If we fall out of the upper distribution, then I'll reassess. Nothing more to it than that. Trade and risk management. That's the kind of post that he makes and the kind of thinking he has. So that's give you a flavor of that. Well, I screwed that pooch. Now the IB 30 stat has been done again right here. And so this line will move up here and this flag will move up here in 30 seconds. Remember that story I talked about? And I'd like to be using this settlement as a springboard here, but now I don't have the range requirement, and all the way up there's not the range requirement. We're just piled on top of each other. So that's goddamn frustrating that I hesitated over there on those lows. That'll be one to retrade, but it's pretty obvious, you know. At some point, that's where the risk comes in. You put on a trade, and that's what you do. If you're trading it as mean reversion, then you put the trade on at the bottom, and you know it's either going to work or it's not. That's the mentality that you have to have. And we've got about 10 more minutes until the IB sets. What's all that about? I'm hearing all kinds of noise here, and I don't know what it means. Something's happening somewhere. I'm hearing bells go off here, but I don't know. I don't see any notifications popping up anyplace, so good for me. Yeah, this just sucks. What is that? Yeah. If you look over here, here's where I was talking about I should be getting in here, but I'm leery about this, blah, blah, blah. Well, here we are. And now they're going to head up for the EVPOC, which is, again, the highest statistic there is. And maybe not, you know. Maybe they'll come down to settlement, and I'll put on one and see where we go. So 67. Oh, look here. Why? Oh man, I did it again. There we go. Now, I'll see if this works or not. So risk neutral would be right here. Typically, I am not in my proper risk neutral range because I've got liquidity in this level. So that's not a good idea. So trade one is on at 2-1. Trade one go. Well, this doesn't look very wonderful here, does it? Now I have to think about, do I want to pull this? Well, maybe I don't have to think about anything. Do I want to pull my scale below the liquidity, which would mean closing in my stop so that I maintain the same ratio? And I may have done something that I have also issue I've had in the past, which is getting ahead of the IB by about 10 minutes, which is where I am right now. I won't move my stops because I don't do that. And the outcome of this trade is 50-50. Now I've got a level here and I've got settlement there. And will they take me out or will they go up? Right now, I don't like being on the bottom side of either of those levels. And I don't like the fact that I didn't get immediate traction off of that. This is a quandary that I don't really know what to do when I have an improper entry like that, whether to bring that target, which is the risk neutral scale, down here. So that's only a couple of points in the money, and that would bring my stop up. But it does give me the risk neutral idea. And that's the proper spot that I should have entered, meaning I should have entered lower down. And they don't seem to be wanting to go my direction here. Where am I? There's trade one. Anyhow, all this conversation and analysis, and then I don't do very well. Pretty disappointing. I did think that I was going to get a good base off the settlement and the previous close, however, but this is a stop out right there. Pretty much to the tick, which is always magical. God damn, look at that. Isn't that something? And then 0215 and we'll do the post-trade analysis. So yeah, it's a, stupid. That's the only trade I've taken all week, if I'm not mistaken. No. So, here we are just chopping around over the top of my stop, which was at this liquidity. Now, I don't feel too bad about letting it trade back down to settlement and close, expecting that was going to be a level up until I look at IRT and I see that I entered up here and I had this consolidation below. So they came back down and tested this, and now they're probably going to trade it back up again, which is really annoying. So I was off by a point from, now that would diminish scale yet. Yeah. Anyway, that's trading. It's magic, isn't it? Where did that go, actually? Try to get these this is the trade viewer on IRT. You can actually select the two different lines and get what each stop was as far as MFE and MAE and a bunch of other stuff, which is pretty handy. Yeah, so here we are. There's the entry, there's the stop, a couple more ticks, and we'll see what happens. Some bits will probably go up here. Eventually, it'll get that overnight volume point of control, but it's going to do that without me. Unfortunately. And so here's, a stop on the account. Just really amazing. It seemed, I don't remember the last time my first trade of the day was a winner. I don't quite understand what the matter is there, but it's certainly something that needs to be, fixed. That's for damn sure. Wow, I gotta move. Yeah, certainly something that needs to be fixed. That's for sure. And now we're trading up here to this level and likely to go to my targets. And how do you address that? This is the point where not for revenge, but I feel like I should now be extra focused and trade, and is this area here going to continue higher, or are they going to continue to trade it back down again? So is this a breakout, or are we actually getting over this level? And should I have jumped right back on over here? Which is, I think, or here, perhaps. This is kind of what Tom does, but then that doesn't really make a lot of sense. Well, that's right down to the developing value area high, so that is kind of a line in the sand quite frequently. Getting tired of this shit, though. I'm getting tired of reading about everybody making money and they're trading like wildfire and not paying any attention about vetted. I mean, they say vetted trade, but I don't believe it. I don't believe that they've captured. How could you possibly capture 50 examples? In my mind, I think this. How could you possibly have captured 50 examples of that particular setup and that context, because we haven't seen this context for days or weeks? So how can that be? Maybe I'm too particular about the context story. Here we have 4, 4, 9, so there's no exhaustion there. There's no really idea why we would be coming off of here up. We're consolidating like crazy below this closed and settlement. I don't know what to say. Sometimes I get to the point where I think, well, I should just trade the hell out of it and see what happens. Even if we pull back to right down to here, which we're going to do apparently, that's just barely the scale to yesterday's close settlement. Yeah, don't know what to think. A lot of liquidity laying up here. That's obvious. You can see all the liquidity building. And I don't know how to think about this, I am all understandably, I think, it's disappointing when you take a stop. I don't care what anybody says. So to jump right back in the next second, not really at that point in my mind. Don't know what to think. Disappointing, though. Here we go through the developing value area high, and I guess now they're going to go down and see what the Mid the VP of maybe we're on a mean reversion to the bottom side again now, But we've got a low volume node here. We're at it right now. Will they get through that, take it up, or what will they do? Typically, I'm a short preference person, but maybe not. Maybe this is a long. Not seeing any buyers here, though. I don't see any buy delta all the way down to here. There was a buy iceberg at 47, but we're under the developing value area high. And coming down here again to retest this mid and Globex volume point of control. I don't know. And a poor didn't enter there. Here's the first buy bubble we've seen, or first buy delta bubble we've seen. Don't know what to think about this story when I've got these this 3-point range thing hanging over my head there. And I'll let this trade down and see what happens. It's a long day, and it's only 9:30. We haven't even 9:33. So we have set the IB now, and we do have the VPOC is below us. Mid VWAP, all this stuff is down here somewhere. I don't know what's going to happen here. I keep missing this. What looks to me to be buy opportunities of this iceberg at 540. 540 iceberg down there. Buying all along here. Selling, and it's absorbing. But we're not getting any buyers hitting into it. I don't see any buy delta going up. Only sell delta. I don't think. And in that case, then I suppose the thing to do is don't trade, even though I wish I hadn't done the last one. But it is what it is. So we're sort of mean reverting here. I don't know whether how far down we're going to get. Kind of a toothy profile. Now we got a little buy-in going in there up to the developing value area high. Will that go up? Try this long. Oh, damn it. Let's focus on the book map thing once again. See what happens here. I did it again though. Late, so my target's out of the whack. Oh well. Oh well. This where's trade 2 now? 226. Trade 2, 226. 02, 6. And that's not getting any place. Well, this is just fun, isn't it? Now, if this gets stopped out, I'm going to go do something else. Uh-huh. Oh man, making a mess out of all this stuff. 2, 2, 2. Wow, gonna stop again. Ha! Wow, that's it for me. That's just completely annoying. I don't have this even remotely figured out today. So that's enough for me. Uh, 2:28. 2 minutes. Yeah, so that's just pretty annoying. So there's 2 trades. I think my last 3 trades have been all losers. And I don't know what to think about that. But it is really annoying. And then, we bounce off the mid and VWAP and up we go for scale. Jesus, Wow. Pretty disappointing. I haven't got it here lately. I don't know what the problem is, but it's pretty disappointing. Yeah, I don't know what to think about that. That's pretty darn disappointing. I don't think I've captured my snaps here properly. So there's that. I enter all this crap in the journal for whatever that's worth. Okay, well, so there's the stop down to blowbacks and these levels, which, in hindsight, where I should have entered rather than here, which is a breakout above the developing value area high. So this will definitely be an error code. Not entering down here, entering on the breakout of the developing value area high, even after that long dissertation about breakout entries as errors. Jesus, it's amazing how that Dr. Hyde or Jekyll or whatever it is can screw you up or distort your decision process. Not okay. So, didn't take it here, didn't take it here, didn't take it here. Took the breakout at the high of the breakout, got 1 tick above it and stopped out right here. And it went right back down to these levels. Now it's going lower, but had I entered here, I was scaled. The big key is the scale story. And we may revert back down to the VPOC. Context so far is up. We've traded up, and now pull back to the mid and VWAP. And will we go up and take out the IB high, or will we come down and take out the IB low? Who knows? I clearly don't know. And that's pretty disappointing. 2 complete stops. 2 stops to the tick, so that's $300 or $600 or 48 ticks. Which is, this is one of the things that's really irritating because not only is it psychologically a bummer, but a bigger hurdle is now I have to have 2 winners to be back to even. I'd be I'd be better off account wise to have just stayed in bed. I'd be ahead of the game if I just didn't pay for this trading stuff. And, I mean, that's the problem. That's why not having, I think I'm going to have to make a rule for myself, which I'll debate over this weekend while I'm doing this. See how fast this Python stuff comes together. But I think I might make a deal with myself here, or a new rule that I will not take another trade until I absolutely have a vetted, verifiable, show it here on the stream data verification of a vetted trade. Gonna see how that works, but I'm going to see how that works. But that's very likely what I'm going to do now. Oh, come on, get back up here to where I was. Okay. And now we have a VPOC migration up, but it is the full session and not the RTH. Look at this crap. And it's also ironic that, not in the not too distant past, I would never take a long. I would just focus on shorts. And had I done that twice today, I'd be up 2 trades. I'm trying to be more methodical and professional and open myself up on both sides. And it seems like I'm opening myself up to a serious bitch slapping. So, whoops, wrong mouse. So I think, yeah. What do you do here now? Do I take another stop and blow up or whatever the case may be? Let's just see something here. Oh, I thought that was in here somewhere. And there's, way more than once I've been in a situation and traded back and up, and that's not unusual. I've only had 2 stops. Granted, they're the only 2 trades, but to get aligned with the market, only 2 stops to get aligned with the market is not really unheard of or unusual. And, all you got to have is one good trade or two just basic. You take each trade off at the scale, and you're right back in business, but you're right back to neutral. But it's the biggest problem for me, and I think for anybody, is be real careful that you're not revenge, getting even, whatever name you want to call it. Yeah, that's what you need to be careful about. That's what I need to be careful about. Now, let me think of what I've got to do. I need to do something else here. I need to check out where that account is against the drawdown. Which I have to look at on a different machine, which I am going to do right now. I think my worst day was not too long ago, actually. 48,602 is the minimum. Yeah. And it's so bizarre because previously when I was trading these evaluation things with Top Step, my account profile my account profile would just be a steady up curve to the target. Maybe. And look at this now. Why aren't I short? That would have recouped the entire 2 shorts. But the important thing to think about see if I have a note about this somewhere down here. Yeah, here's one right here. Yeah, I probably got these timestamps all goofy now, but anyway. As even though you're fully aware of what's going on, those things still a lot of those trades stops put me on tilt, and I'll be the first to understand that. So one of the things I'm saying here is that what I was getting ready to say is it's really, really important that you have the vetted trades, statistical business, and that your risk reward is greater than 1-to-1. Here's a perfect example of that. I'm down 2 stops, right? Which is 48 ticks. Okay. If I have a 1-to-1 risk reward, I need to have 2 winning trades to be back to 0. Now, if my risk reward is 3-to-1 or 4-to-1, 1 winning trade makes up for 4 losing trades, right? It's just, I realize that's simplistic, but sometimes people don't really understand that. So you're taking 1 step ahead and 2 steps back, or, in that case. And it just makes getting back to even and getting ahead and getting to where you want to go, which is consistent profitability, that much tougher. So here was our mean reversion. Back to the VPOC. Below it to spank a few folks, and then back up we go. And they could take it all the way up to the to the IB high. Wouldn't be surprising at all. Oops, I'm sorry, I'm looking at the wrong chart. There you go. So here's our VPOC. So it was mean reversion. All all these long trades I took where I got stopped out, had I just shorted up here as I would have normally, trading the mean reversion from the outside in, sweet. 14 points without heat down. Had this been a short, as typical, that would have been 10, 13, 12 points down without any heat to the mean reversion. So I'm not recognizing mean reversion. I'm thinking continual trending. And I guess that's a big shortcoming. Obviously. I can think of about 48 reasons why it's shortcoming. And so what that boils down to in dollars is $600. I've traded 8 trades, 2 trades of 2 lots in and out, and that's exactly 48 ticks, because each stop is 24 ticks, right? Because each one, it's a 12 tick stop per contract, and that's how the risk neutral profile is: 12 tick stop, 2 contracts. Now, I'm not ever going to start messing with that until I have the ability to quickly backtest what-if scenarios. So here we come back up to, we trade right back up to the developing value area high, get no place, turn around and sell it off. Now this is, of course, RMT, rearview mirror trading, and it's just horseshit and bus tickets. It's what most of the internet gurus do. Sure, I can see that right now. Could I see that would I see that and take that short on the hard right edge? What's going to happen right now? Which way is it going to go? Is it going to go down here to the mean? Is it going to trade back up here? This is the hard right edge. What is going to happen? It's so easy to see what happened over here and easy to call that like you're an all-knowing soothsayer, But to actually take that trade and have the conviction or have the statistics to back that trade up, no way. Way. Some people did, I'm sure. Yeah. And it's only 9:55. Pretty early in the morning. And I need to look at my phone to see if they're delivering our new dishwasher. Not to be off track. But... Any text about the dishwasher? Yeah. Another thing to point out here while I'm in a not the best of a mood. Is risk capital, emotional capital. And that one of the things that's particularly deleterious to my attitude is going into a weekend in a hole. That depletes my emotional capital, and I'm aware of it, but that tells me that I'm still not mentally aligned with the fact that this is a random market. And I just got 2 stops out because I wasn't properly aligned with the market. That's all. I wasn't right. I wasn't wrong. I just wasn't properly aligned. But I still have a feeling about that because of emotional capital. And on top of that, I really dislike going into a weekend on a loss because then you have 2 days to think about that. And maybe I need to just blow that. That would also go away if I really internalize the fact that this is a random market. And, essentially, you can put a trade on any place and you got a 50-50 chance. If I slapped a short on right now, I got a 50-50 chance of it being a winner. Statistically. And say that I just did that at that exact moment. Okay. So we're short at 57, we're short at 58, and we're at 56. Traded down to 56. All we got to get down here is toward the VPOC, which would be mean reversion, and very likely it would be a profit. Now, trade that I didn't see here. This is the VPOC. There's a structured trade in the TLab. Mid VWAP VPOC is a structured trade, and that's a mean reversion type of trade. Okay, I didn't see that. I was, thinking about something else or not in the room. These are structured trades in the TLab, supposedly, and I believe vetted. Okay, but it is still random. So this test, trade through, test up, short up here, 59. You're scaled at 56, and you're looking for 54 as a target. That is, and that qualifies for the 3 points of range to the scale. All of those things. That's how it works. The problem I have with that is, I guess I haven't internalized that it's a random market, and I still haven't internalized, and which adds to the fact that I still take it personally. Now here we just tested up there again, and will it go on down to the VPOC? And psychologically, the minute that did that, and I started thinking, okay, so is that a trigger? My immediate thought was that it's not a good trade because we've tested down, didn't get any place, tested back up. We may test down here and come back up now through because we still have the IB stat open. That was my real thought process as to why I'm not short at this moment and would be scaled on this retest back up here to a vetted structured trade in the TLab. So that's a bummer. And now we have a and caution Will Robinson moment, because this is a VPOC migration. This is the first one in a hell of a long time, I think, most of the morning so far. This is a trade that's also a structured trade in the TLab, but there's no range now because it's 58 to 59, right? So there's no range before all of these levels. And yet we may, and it may work magically and go straight up to the, POC. I mean, IB high. Tough alignment day for me, obviously. And it's just that a matter of that click, if I clicked a 6 instead of a 4, I'd have, on my keyboard, I would have been short and well in the money with no heat. A whole different perspective on life. What causes that brain fart in decision making? Why is it so tough to be aligned? I guess because I was fixated or comfortable with the idea that our context was up and that the IB high was close at hand, and that this was a pullback. So I guess that's, I'm trying to think of why I did that, or I just overanalyzed it. I think the root problem is that I don't have a structured trade that has been properly vetted. And I think going forward, I'm going to really focus on Python this weekend, and I'm going to have a vetted trade by the end of next week. One. Or I'll ask somebody on TLab that's got one and share their stats with me. But the big problem with that, the big problem is everybody says they've got a vetted trade. What's the exact context? What is the specific context and the specific trigger associated with it? Any bird brain can see this is a VPOC migration, which is a structured trade. Anybody can see that. And if you want to be technical about it, we've now been scaled, even though it doesn't qualify for any of my rules across here. But it is a structured trade in the TLab. Okay, but what is the vet? I don't consider it an active trade for me because I've gotten stopped out on it way more than I've been positive, because the minute I would take this mechanically or take this little test right here, it would test back down here to into this area somewhere, stop me out, and then go the other way. So and it is, again, a function of risk reward, because if you take a number of trades in the day and your risk reward is such that the winners are more than compensating for any stops, that's, that factors into the Holy Grail. And that by definition is the fact that that probability because of the edge, so now, was this a long, are they going to get up here and take a long, or what they going to do now with all those levels in the way? And the VPOC migration up beats the hell out of me. But right now, couldn't take 60, couldn't take a long here, because you got all these levels below and the VPOC. I don't know. Let's think. Is that a breakout across these levels? I don't know what to say about that. We've had another VPOC migration now, and we're trading down here. So I would be justified in taking along north towards this area, I guess. And as soon as I say that, they trade down to a price check at 3. And that's exactly what usually happens to me when I was encouraged by that. I thought, oh, another VPOC migration above all those levels. That's great. Here we are. We head for this up higher ground. And here they go, right back down through here again. And that's exactly what happens to me every flipping time. Or nearly every time. And what do you do here? Do you go long here thinking it's, what do you do? I don't know. And this is really only right in the middle of all of this, all of this noise over here. All this consolidation. By the way, I'm not remembering to put in my little flags I have. That's bad news. Come on. Got that one, got that one, got that one. Okay. And here they are, price check at L3. So I went long here with my with my exuberance. And I'm stopped out. I'm not, but I didn't take the trade. But that's exactly my experience the majority of the time with the VPOC migration trade, which is a favorite among a lot of people. And what's going on? I see what's going on over here. Where am I? What window am I even on? I don't even know that now. Yeah. Irritating, but it is what it is. And back down we go. So this is some sort of congestion area, huh? And now we're gonna go down, I guess. Said that. I mean, they'll probably go down and take out the IB low. I sort of liked it better when I was always looking for shorts. Oh, sorry about the yawn. I think I liked it better when I was always looking for shorts. I had a much better win rate, I think. But you can't possibly look at this situation right here and be thinking shorts. It's not. That is out of alignment with the higher time frame. So that's stupid. And why I'm not seeing it today. Oh, wait. I know why I'm not seeing it today. It's out. It's gapped up again. No? What the hell's today? Missing something there. I'm missing the today. This was yesterday. This was the 15th. This is the 16th. Where the hell is the 16th? I see the trade going on over here, but it's not plotting the 16th. Now, that's pretty magical. Let me just refresh my data. And going, hey, wait a minute. That was yesterday. Oh, I think I need to make sure I've got a good supply of wine on hand. And there we go. Now we now we got today going on over here, and I will draw a new volume profile here, unless something happens and they close that gap. There we go. Thank you so much, Mr. Thing. This consolidation, look at how this thing is building. I'd like to just jump on along and have it go ripping up to the top or short to the bottom. For some reason, well, I know why. My thinking is long. I just pointed that out in the micro composite. And here's our VPOC. So, and we haven't got any more of them above us. Of course, the minute I say that, the morons pull it back to price check at L3. And another VPOC down. Yeah. Is God, is Jesus going to come back at 1 or the top of the hour or what? The second coming of Christ, the top of the hour or what? What am I doing here? There we go. 12 o'clock, we got nothing. Well, the Atlanta Fed was talking GDP at 9:30. That was a long time ago. Now it's just horse shit and bus tickets for the rest of the day. Rig count and stuff like that. Numbers for crude, but not anything. Yeah. So looks like that IB high is going to stay set, which is was made at about 9:15-ish or something like that, 9:20-ish. This consolidation crap is just annoying. Look at this day. We haven't tested lower. So that's perhaps a possibility. But I'm relatively sure I don't want to get involved in this mess. Just really irritating, though. The irritating part of all of this is it's a random market. The outcome of the next trade is 50-50. So you just clicked the other side of the mouse, or however you enter your trade, on any of those losers, they would have been winners. I think that could possibly be the more frustrating part to me, or certainly adds to the frustration. It's just a matter of in my case, I have a function key, and then I have all my hotkeys set up on my keyboard, right, on my number pad. So a 4 is a market long, a 6 is a 4 is a limit long, a 6 is a limit short. Had I just hit a 6 instead of a 4 on either of those previous trades, or on both, I would have had 2 winners in the bank. And it's just that. It's just that. What is it that prompts that? And some people say, well, if you're, and maybe it's not a joke, if your inclination is to hit the long, hit a short and see what happens. And I guess maybe get an evaluation account or something, one of these things. It doesn't really matter, and then give that a try. Who the hell knows? Who the hell knows? I mean, that's been a joke for years. Is that, well, if I just went the opposite way of every time I think about an entry, I'd be rich or something like that. And in this case today, that's exactly right. Because neither one of the trades today had any positive excursion, or MFA, favorable excursion, they call it. MFE, I mean, if I remember correctly. I don't want to scroll back there because I want to look at what's going on here, but Jesus, this is a mess. And you sort of imagine that at some point in time, this is going to break out. Yeah, what I didn't understand about today is it's a triple witching day and options expiration. So these guys are killing it. And boy, am I stupid for trading that. Yeah, well, I guess I don't feel so bad. I wish I'd have known that, not taken any trades. Look at this crap. What often happens, though, is they'll hold it down like this, and then they'll run it at them. Remember that these options are futures or hedges for options, right? So that's why they're keeping the volatility choked off and making the saving the premiums. These guys, options guys that sell options, sell premium, right? They sell an option and they get that money. Then they have to keep that option if you have enough horsepower. You keep that option in a condition where you keep the premium. In other words, it expires worthless, and you keep that premium. Know very little about options, but that's kind of generally it. That's generally it. Driver critically hurt in shootout on the East Freeway while driving. Jesus, this place is like the frickin' Wild West. It's actually, I lived out of the country for most of my adult life. And a long time of that, 10 years or so, were spent in sub-Saharan Africa, and ended up in Angola, actually, and Zaire and places like that, and then ended up for a brief, I think, 1 or 2 years in South Africa, in Johannesburg. And this crap used to happen over there, and everybody in the rest of the world, said, "Oh, well, there's Africans, blah blah blah." They'd have shootouts on the freeway and all this kind of stuff, and it's exactly where America has ended up, at least here in Texas. It's. I think the problem is the education, the lack of education nowadays is staggering to me. In Texas, here we're going to get somewhere now. Now I'm kicking myself for not taking a breakout. Anyway, here in Texas, the education level is at a low that they have recognized. The state education department has recognized that a large number of graduating high school seniors are illiterate. I'll say that again. They cannot read or write. And so rather than so graduation from high school is not a qualification to enter a Texas university. They have come up with a special test called I something or another. Just staggering. How in the hell does a child graduate from high school and can't read or write? I mean, the education, it's a horrible atrocity to the children. It's just a really crazy place here. Rather than improve the education, the state puts in place a test. I guess the idea is to just keep weeding out minorities and other people and just keep pushing the little privileged white kids to the top. I mean, I don't know what else it could be. I don't know any other explanation for it. I was staggered when I learned about it, especially because we moved back to the States to give our daughter the opportunity for a high school education over here, thinking it was better than what we had available to us in Malaysia. And I think it was a mistake, but here we are now, and she's done quite well in high school and is getting offers from colleges and stuff like that. So obviously there is a group of people that
can get there. And I think that if you looked into the numbers, it's the majority of those children who can't, that are English isn't their first language, and all of those things that a certain political group wants to further, and at the expense of everybody else. I think it's just disgusting. Truly, truly a travesty to the children. Not to be political, and I'm not. It's it's a fact. Look it up. Well, I suppose the breakout, the tests, and long. Now, 0 to 3, scaled. Where are you going to go after that? So I'm going to go long up here and get my breakout shoes, get my breakout FOMO shoes on, and take another stop. Probably not. That school story is really scary. That's the reason I think that we're in the political and the situation that we are now, is because there's such a vast number of uneducated people. Yeah. You reap what you sow, I guess. And I suppose that, well, I don't suppose, it's definitely a part of some political agendas that the object is to further one group over others. And education is a great way to do it. I mean, that was the determining factor, 150 years ago. And I guess they realized that, and now they're going to roll it back. There's no goddamn way in the world that a child, in my era, a child could have graduated from high school and not be able to be completely literate, read, write, and not to mention all the other stuff you had to learn how to do. They wouldn't graduate you. You kept at it till you could, held back or whatever, they failed a grade or whatever they called it in those days. I was truly shocked when I got over it. We have a friend, my wife has a friend who I know from Asia. We also most recently lived in Kuala Lumpur, Malaysia for 11, 12 years. My wife and daughter are Vietnamese. But we have a friend who's lived here in Houston for, I don't know, maybe 8 or 9 years, I guess. And her son was in this school system from, I think, the last grade of middle school or whatever it is, all the way through high school here in Houston, Texas. And he graduated from high school. And he couldn't get into the Army because he couldn't pass the English test. Now, the American Army, as near as I remember, you basically need to have a pulse, and they'll take your ass. I remember during the Vietnam War, they drafted guys with one leg. So, but this poor boy didn't get a good enough education from the Texas school system to be able to pass a basic English competency test. Truly shocking. Truly shocking. And the private schools over here, because we had our daughter in private school in Malaysia. The private schools over here, I thought, well, let's do that. And when we started looking for first the best school district we could find, and then a house in that school district. And my first thought was a private school, and the tuition started out $40,000, $50,000 a year for high school tuition. That's where the Ted Cruzes of the world and all those people send their kids, right? It's just crazy. Yeah, it's really weird. Weird what's happened to my country. I'm an older man now, so I remember remember it when it was a much different place. So my breakout didn't work. I would have been scaled, however, but I think these option guys have just got a hammer on it, and I'm going to have to just resign myself to the fact that I'm going to go to bed this weekend with a couple of stops in the book and think about trading my way out of it starting next week, and let that be that. And here Tom's now got Tom streams in the TLab every morning from 10:30 to 12. If you hear some talking in the background, that's it on another computer and another monitor. I typically don't have the audio on, but the way I have it, he streams both on YouTube and in the Discord of the Traders Lab. And I don't know how to mute the audio in the Discord, to be honest with you. Well, there's another opportunity where there would have been the scale, just barely. There's the scale from here. But this is trading from the diddling in the middle, from the VWAP out, VPOC out. And that's a no-no as far as I'm concerned. Oh, no, I'm sorry. This is the full session VPOC. This is the VPOC, regular trading session. I'm sorry. Yeah, I don't know. Go.
It doesn't mean it doesn't work. See, the fallacy I built trading systems, so I went much further get to, and that's because I was managing dollars being asked of that, so I needed something, and it was swing trading. So when I found indicators loaded on, and I started using it, ended up doing systems of all indicators because I was looking for certainty and more fit. And what it was is everything was random. By the way, my next target here, which is not material, I can get into 68 and then 20. And I've been narrating all this trade.
Oh, well, shoot. Now I'd be at least a little bit happy here. And I'm scared. I'm leery now to get in. I'm late and, on my education rant here. So, there's a test. What did we do? And as well as anybody on the planet knows, below any of these levels, and especially the POC, is a philanthora of stops and fuel. You look over here at the, all of this level, there's stops living down here. Bunches of them, and especially up here. Now all along here. And now we're trading up a little bit. So I wish I would have, woulda, shoulda, coulda long. But yeah, I think the plan for me, rethink exactly why I'm not as consistently profitable as previously, lately. Maybe because I'm primarily trade shorts well, and this has been an up market from this last, few days. I don't know. That could be part of it. But I trade both sides of the market pretty well, I thought. Today I had 2 opportunities for long that got hammered right here both times with just only targeting this IB high, which has got a high probability. And the overnight VPOC is the highest there is. Now we did just get to that, just under the Overnight VPOC. Right here. So, yeah, I got no idea. You know, put on another long and just go out and have breakfast. Beats the hell out of me. Really? Really, it beats the hell out of me. I think that the triple witching and keeping the lid on the options is probably a big part of it. Not to say that people manipulate the market, but people manipulate the market. People with a lot of money. I don't know what to think. I do know one thing I'm going to think, though. I'm going to go over here and look at something else. I'm not recording this, so that's okay. I'm not screwing that up. See what this says here. So the minimum is 48,602 there. Okay. Where am I now? I don't even know. But look at this noise. Yeah, so that takes it down to one stop, about one stop away from blowing up. This eval count. Pretty weird. Just, from. And wouldn't I have liked to take this long retest here on the pick one, full session POC, the Globex VWAP, the mid, the regular VWAP, Jesus Christ, everything. And they can't get it above the developing value area high, it doesn't look like. But I don't feel confident enough about this mean reversion idea up here to trade it back down to here. I think they're going to go up at some point in this day and get the high and the IB high and this VPOC. That's what I think is I believe that will happen. But I don't know what to think about that. I don't know what to say. Maybe they're going to do that now. Got settlement in the way there too, which is a big one for these guys. And you see right over here where I tried that before. I got hammered right here. So down here, there's 5 points, and now we're up at 8. So this is the get on long opportunity, but this is RMT, right? In hindsight, I didn't see or think that at the time. We traded here, we traded down, we traded here, we traded down, we traded here, we traded down, we traded here, we traded down. Why would I think that trading here back would not go up, would not continue down? I don't see any reason for imagining that or anticipating that or any of those other things. Make a sneeze.
And my volume shifts high. Now, this is just the way to trade.
I really don't know what to do. My mind hasn't changed that we're going to take that IB high, but we could end up in a whatever they call the day where you don't ever do that. Inside, I forget what they call a day that doesn't take out either the IB high or low, other than a pain in the ass. I forget what that's. There is a name for it, but you know, and we're just what we're going to probably do here, which is even more annoying for me, is that we just slow grind up. Now, looking at this profile, what's been happening here today? It's a mean reversion day, right? Mean reversion, mean reversion. So we're outside in. As far as the entire trade goes, does that mean we're gone as far as we're going to go out? Going to mean revert back? Or are we going to get up and get this outside, this IB story out of the way? I would think that looks like where we're going by over here. But got liquidity and a lot of liquidity living up here. And we're just slow grinding off of that number down there, which is 60. So you're up 7. If you were clever and took that proper entry, you're looking at 7 points. Up here for me now, this is a breakout. Above settlement. So I'm thinking that this is probably just a good reason to call it a day and not bother with this. Not bother with this. Disappointing, for sure. Emotional capital, big drawdown. Open. Up. Thinking more up. Stop out. Pull back to here. Where's that second trade? Oh, there. First trade. Second trade. Stop. Back up. Now we're back up to where my original entry and my target just below the IB high. So, yeah. All of that kind of consolidation and absorption, what does all that mean? All those people buying and going no place. That's not stopped covering or shorts covering. I would imagine that that's initiating buying. Same as here. But we've got absorption, all these icebergs and a few stops going out. Got to be careful here now. If you were to take along here at 67, got to get to 70 for scale. And now they're going to pull it back down towards developing value area high again, which is where I thought I went long the last time. let's see what happens here. I'm not going to go long, I don't think. Because I'm still not looking at the profile. It's a perfect kurtosis and, rotational mean reversion profile. But my initial reaction is that at least my bias is we're going to get up and take these extremely high targets. But we don't seem to be doing that. And looks like we're going to go down here and mean revert again, I certainly wouldn't take a long in here. Stupid. I'm going to get some water. Mom, I need to have skip.
This too high. Right below this. What is that? Too high. Where am I going? Let's see. Too high. What's that say? And I took it and I said to myself, this is a very high risk trade because of this. So I did that. I think I jumped, but this is too high. So I got one. I got a scale because this is too high. And then I'm looking to squeeze these guys. So this was aggressive. I think but it's part of my plan. So where's my opening? It's down here. So I get taken out of this thing. So I scratch the trade once it comes under. And there's that stuff. Notice too high. So what happened here? High, break, long, too high, break. Gotta hold the microstructure here. Test. Thinking I'm getting a quote away with it. That's still too high, right? Can't get back above here. Trade is really dead. Okay. Now back here, too high. What do I know? Opening swing low. Forget about it. Interested now. So I take out the.
Well, and here's that. Oh, well, I'm definitely not going to go long here. Comment. And up we go. And now what did they do? They came right back down to this support level. You can't really see any liquidity there because of this bird brain here, but yeah, 54 to 57. Well, 64, sorry. That's a scale ahead of the level. So that would have been okie dokie. Actually, not specifically because it's 50 cents off, but now what are they going to do? $68 to $70. So there's 67 to 70. I think probably that this is just being manipulated by the options guys. Absorption of 129. That's previous value area high. Remember, that's from yesterday. This is from today. Yeah, maybe this 38% was true, huh? I don't know. My reaction now is to throw it long on there and see if this damn thing continues up. But the second I say that, it takes a pop. So I'm guessing I'm going to have to just watch these happen and not be involved in the IB high or the overnight VPOC. And I certainly don't have any kind of statistics or know anybody else that does about what happens with all these liquidity levels that are stacked in here because of the options guys. Look at that 200, 200, 200, 100, 200. They're just every 2 ticks, they got 200 contracts parked in there to sell. And I'm sure glad I didn't take that high volume note. You're high. Now, a trade, in my opinion, would be this pullback to the developing value area high and a continuation for the IB high, which is what a trade I think I tried to take a minute ago. But it didn't work out very good, and I don't know whether it would this time. So, I don't know what to think. Happens about that. I don't usually ever do that. And didn't get anywhere from the looks of it. Oh, Jesus. I'm not sure how he even reads that crap. Oh. Yeah, so didn't get there. Took that one off. Be down to the developing value area high and then, pull back to the developing value area high for the next leg up. But I don't know if we're going to get that next leg up. And I suppose the place I missed it was down here, which I've already talked about. 11 o'clock. Now there could be, the big move could happen over the lunch hour, which isn't surprising. 12.1 thing. Now they're going to take the damn IB high, and where do like I said, it's just they just keep stair stepping it up from here to there. There's 2 points only. They will probably take that overnight POC, and there would be stops above it, so it would run. Because there's a lot of fuel up there from the overnight point of control. Is the thinking. And back down to right back down to that little boy there, and didn't get to scale. Huh? So I'd be in the market had I left that sit there. And let's just imagine what would happen. Tom uses these lines a lot. I don't know how the hell he does it, but that's a good visual reference right there. All right, okay. I'd be in the market because it traded through it. Now I would be long 2. And 2 points in the money, and not to the scale, because once again, the scale would be above the level. So that's not any good. There's not the 3-point range. And excuse me. So hypothetically long from this entry, which it didn't come down to, and I pulled, but would have hit here. Only 2 points there, so no scale. Scale would have been above the level, which is even worse. That's why I pulled this. And here we go. Would this be stop number 3? $11. Typically, the developing value area high in an uptrending market is a line in the sand and a relatively defining level. And when you've got settlement just below it, a point, and the previous close just below that, 2 ticks, that's a fairly substantial level. You know, it isn't a big stretch of the imagination to think you're going to get to the IB high and the overnight volume point of control, which are the highest statistical probability. And only, 5 points up from these levels. So I think this day, as was pointed out by somebody, in which I didn't think to remember, it's a triple witching day, and options, around options expiration. So those guys are fighting tooth and nail to protect premium and have these options expire worthless, and they get to keep the money. And here would have been a little heat on this entry. Right back to settlement. Not forgetting that down here is a whole buttload more stuff. The VPOC, the mid, the VWAP, the full session POC, and the full session or overnight VWAP. All in a big pile, and the mid and the overnight mid. All in a big pile down here. So if this were a mean reversion play, this would be a short. I wouldn't short this up here because we've got the very high probability statistic around the IB high and the overnight volume point of control. So, it isn't a option for me to trade that mean reversion. I still think that's the predominant direction is north at this time. But, there's what I get for thinking. So where am I now? Okay, so there's 68, 67, well, only a point or so south, but they're definitely sitting on this thing. I'm getting the yawns now. Oh, Tom, that is a real busy mess you got going on there. I don't know how you can see all that stuff or even read it. Yeah. I think I just was misaligned with context a couple of times, and that's going to have to suffice, rather and not try to push the issue again. None of this area qualifies an entry for me. This just barely doesn't. Here to here, 3 points. And we're, not getting anywhere. They can't get this above that previous value area high to save their life. So, yeah. Yeah, when it takes off and runs up there, I'll be, cussing myself for not getting on along again. But after twice and getting stopped out both times, I'm going to go pet the cat. Okay. Mama's got a better idea. I'm going to go do that too. I'll be right back.
Let's go back. This is the retail.
And so they finally got it. Okay. And now what are we going to do here? We've got the overnight high above us. It's frustrating shit. This is, what I was looking for here and then here. So, just timing, right? Had I entered any of these, that same location would be 10 points in the money. So I'm thinking that I'm just off the trigger today, and I'm gonna go look at my other. I'll keep it running and the stream running, but I'm gonna look at my other. Haven't even looked at my other emails and stuff yet, and it's 11:30 here. So I'm going to do that now. And my wife just had a lovely brunch of great chicken stew and soup and homemade baguette, fresh out of the oven. I'm assuming that a carbo coma will be hitting me here pretty quick. And it's Friday, so goddamn disappointing, but it is what it is. And the most what's this stuff here now? What is all this about? Some great new screensavery weird thing. And this computer, this other work computer is pretty randomly weird. Do I have anything really? Where's Al? Oh, my wife comes in and gives me 2 bites of real good, sweet, fresh mango with her homemade yogurt all over, and then laughs and says, "Bye," heads out of the room. Yeah, well, this is pretty darn annoying now. Rocking the way that I had expected it to go long ago after two stops. So, and the obvious answer to that is, well, then you just get right back in and go for it. For now, here we go. And let's just look at this, having said all that. Here was the order that I put in. We didn't catch it, and I withdrew that order. Would have been in. Very little heat. Two ticks. And 10 points profit. So the psychological part of this game is without a doubt the biggest as far as I'm concerned. So rather than stay focused and on my game or bearing down harder, or, I guess I could have just left that one, but I was gun shy and it was. Yeah. Anyway, I didn't. And as a result, I would have been at least flat for the day as opposed to down 2 stops. Disappointing. Now we're going into the noon hour, which is always exciting. And the closer we get to the end of the market session, the less likely I am to engage. And maybe that's a psychological problem too. I don't know. But, that reminds me of the old saying, if you want to get out of a hole, the first thing you got to do is put down the shovel and stop digging. So I will just kind of coast along here and see how we go into the day. Now we're getting to a point where I would be thinking the following. Okay, it's Friday. It's options expiration. Who wants to be way long going into a weekend on a triple witching Friday? Likely, I suspect it's likely to have a squeeze or profit taking or, however you want to look at it. So here was where I pulled my order. Here's where I put in my first orders and God stopped out. Here's where I had that second order resting and took it off. And there I would be now. Are they going to want to revert to the mean? Are there going to be some profit taking up here? We've now got 2 small distributions, actually 3 if you want to count this thing down here. Distributions. So not an easy trade. However, we are trading over the top of previous now. So this will be a new volume profile up here going into the weekend. And I'll have to figure out what to think about this story here. We did take it. So we have the IB high status made. And, well, that's only 71 to 78. It's only that 71 to 78 is 7 handles, but my stop was down here at 68, so that would be 10. Would have been a solid 10 points with no more heat than this right here. My reason for taking that off was that price did this, then this and this. Well, hadn't done this yet, but did this. And I was leery that was I really thinking correctly, or was I kind of revenge trading, or was I going to try to put on another long and, in a mean reversion day? So fortunately for me, the market has a lot of opportunities, an endless stream of opportunities, basically. So the next bus will mosey along here pretty soon, I guess. Somewhere around here, I actually used to have that in the timestamps.
So try about this. Try to stay on trends and accept stops. We have an outside edge here. If we come down here, we're looking for a trade, potential structural trade, and then looking for here and here. So if I got a, this is definitely not a recommendation, because if the structure doesn't show up in the right place, then I won't have a trade. Can't anticipate locations. I don't just step in front. I need a trade. So I know this is too low. There's the high volumes. I know this is a outside edge. I know this is the ideal location to evaluate. So I know if I got long enough here, I'd have to scale here. Okay. Stop. If I hold this and clear this, then this is turn. Until I know I don't. Find it interesting. By the way, trade this trade will be available exclusively to you. You can send you a screenshot. The other thing to follow the stream, the open is very important. How we open. Today's open is very similar. Yes, the difference is we had a big gap. Today we had so we opened the page when we get to 7. So 7 for many years. It still is gap. So in a gap, there are certain opening structures, and I have shared in the trade, I think 5 structures. When I was talking about the opening swing low, that was a setup potential to take the buyers and then to get them. We had the same exact thing yesterday. The only difference was that we came down about the openings. Okay, and it came down to get it again, and then the same thing. Same thing today. That is part of trading. Those specific behaviors, handling the opening trades, all of that is part of trading. So, and the things I share, trade lab, things I use for myself that I there's no secret sauce. This is something we trade and anticipate. So I don't get my opening and get it subject. Oh, click the mouse. Well, your mind will focus in my opening. saying this price here, high volume, which is where our can of tuna is. S&P is too low. If I can clear this, you know, questions. This is trader land. Hope you're getting something out of this. Believe trading has to be complicated. I believe, and it's just my belief, it doesn't. Anybody can trade. Believe if you come to trader, trade. Saying you will be able to because you've got it. Fortunately, you want to have a career in anything high level, you got it. It's not spent peaking indicators. That is not where the time is to go. It's not been spent family. Understand how the market works, why it flows. Because you can understand what waiting for a candle, something to eventually close. That's price based. Looking here, understand what happened here. Why was I looking for it back here? That is not going to be shown by the candle. It is shown by flow and market mechanics and the auction. Why did the market come back here, right there? And all these are on the chart. Why was this so long here? Even though we wanted it to come a little bit, why did I say I can read message language? This is a language. Interpretation is not indicator based, it is participant based. And our indicators, nothing except they are translators. Like, well, does your indicator tell you to get short? Well, if you understand context, which is the whole, you would not take shorts. Shorts as trade management, if that's a plan. You would use structure for alignment trades. You have a statistical target. And once we're above this, which we already are, that's the next target. Statistics. And the fact that it doesn't have a high problem, think about any high today. If this is the ETH high and we took out yesterday's high, you think it's and we cleared this single, which is a file. By the way, I learned profile back in the mid-80s from Peter Stoddard. He invented it, created it. I also shared an office with George Lane. He created stochastics. I thought, well, when the market profile came, really thought, and I was still indicator oriented back then. George Lane in 1982 and seeing stochastics, before MACD and some of this other stuff, CCI. And I said, this is it. So spent years working on these things, systems. Then I came across market profile. It was licensed through the CPT, and Peter Stoddard. Even back then, I sit in a computer and learn market profile. When I saw it, I said, and then I took my indicators. So I spent about 2 years. I threw about 2 years. So I'm just saying, and we didn't have information. You guys have a problem. Information. There's a bazillion chat. I've seen so much to read on. It's garbage. Most of it. Some of it has value. It's our problem. Well, I got some. Meanwhile, I'm spending. That's what you say. If you come to trader, that's the use with the trade. First thing that trade. So you then you wait for the trade. It creates a template. So you pick one. Those 60 PDFs come to trader lab. Yes. Participants trader. First one that you should reverse engineer. different if they had a dual next target, not a recommendation. Resting liquidity. So the way I look at this is my target. I'm also using order flow. Look here in the book, there's about 400-ish sitting right in here. Might I use order flow and resting liquidity in front of my target from just a question. So right here, you're gonna want there's resting liquidity. I'm running out of time, guys. I got about 6 minutes. This is our next target-ish. Remember, horseshoes and hand grenades. No precision. If I get through here, I do have higher targets up. I'm not saying anything here, and this is an outside target. It doesn't matter. It's a bad. Please give a thumb up if you're in YouTube. If you're getting value from this stream, it encourages me to continue doing it. There's no cost. Visit Trader 60 PDFs. Remember, if you keep looking at just by the way, nature did it with systems. I just did it on steroids. It's all the same. It's called curve fitting. We have to curve fit a process because it doesn't work. The casinos don't change their games because they have. See, that's the. They don't change blackjack. What's that tell us about the process? It's okay. Except if you keep doing the same thing, keep waking up in the same place, that's the phrase I so just I understand. It's up to you. But if you want to be in the business of trading, you got to rethink this. The thing about it is we all have experiences. It's okay. It's what you're going to do. That's your choice. Trader is not for challenge you to change. It's hard because when you believe something, defend the belief and look for things that's it's all part of nature. We have to open our minds, mind things we believe fit this business. Hope you got something out of this today. This is trading fractals using the auction market theory. That's the market. How does it overlay on chassis profile, which shows us participant behavior, statistics, and understanding ourselves, managing our emotions, building the business of trading, using trade plans, and only we have statistics. And over time, if you approach the business statistically, just like casinos do, if you do it right, believe me, it's not easy. Push against our psychology. And if you're interested, YouTube, Trader Lab, download the 60 PDFs of these structured trades. There's a library of webinars so you can see this process. It is random. Something needs to be anchored. Please give a thumb up. YouTube. See if you shows me a little appreciation if you're getting something out of this. The stream is available for you guys. If you're interested, this will be available weekend for Trader Lab participants to send you. Making sure. Now, next target. So this stream, this target, you see the sellers here? This is your absorption. Trade can be done from here. Not anything. It's all up to your plan. Subject to your aggression. This is a trade. And no matter what you do, if it's in line with your plan, that's how you do it. Time, just give that thumb up. Streams of it. Structured lab. Guys, a lot of exclusive material in the training. Plus, there's additional education at no cost. Discord server, stocks, options, crypto, flow with a high tier tool. This could be your trade. And it's all available. Just click the link in the bottom of YouTube if you want to visit TraderLab and take advantage of additional education. Sir, thumb up on the way out, please. Thanks so much for visiting TraderLab weekend. Be sure to review the stream trader. Continue building out the business side of your trading, manage your emotions, and creating a business that can sustain. Thanks for being part of TraderLab. If you on YouTube, stop. Appreciate you. Hope you got something from it. See you guys again.
So, pretty disappointing that the market has done exactly what my premise was here and here. I was just too early, way too early. Now, had I stuck to my guns here, still would be quite a nice, almost 20 points with basically 2 ticks or 3 ticks of heat. Just not on it. I'm gonna go take a nap. Well, let's see, where are we now? Heading into the power hour. We just had another VPOC migration up. What have we been doing generally? So here's the day. My long right here, expecting this move, is where I got my stop. Two stops. Pulled back to here and then skyward, onward and upward. You know, it's disappointing that when you have the right idea, but the timing's wrong. It's just, you know, the randomness of the market. The outcome of every trade is 50-50. So that's where that's at. We just had a VPOC migration, the first one since 10 o'clock in the morning. First one said, 10 in the morning. Migrated up to here. Now this is the prominent distribution outside of yesterday's range and above everything else over here. This is the yesterday and today, so this will turn into a new micro composite apparently, taking back all the skies falling crap in the last couple of weeks. And the full session volume profile is also not volume profile. Micro composite is also moved up here. The POC still sleepy, I guess. What has he got at 2:15 Eastern? Big volume. Important. 2:15, so that's 1:15. Big volume. He's talking about right here. I don't see any big volume at 1:15. He says 2:15 Eastern Standard Time, which would be 14:15. This is Central Standard Time, so this is an hour ahead. This would be right here would be 14:15 Eastern. Once again, the VPOC migration is a structured trade. I've not been able to figure it out as far as, it's pretty obvious. How can you possibly miss when this big yellow line moves around, right? But it's that's the easy part. The important part is how do you figure that into the context of the day, and where do you set your parameters? Where's the trigger in order to vet this, or capture the statistical sample set required to determine if it has a positive edge or not? And that's the part I can't figure out about it. It doesn't seem like any two of them are even remotely the same. I'll have to hoping I get my Python skills up to speed over this next couple of days and can start doing some serious back testing. I wasn't able to get anywhere using RT for that. So we'll see. So the context of the day is up, clearly, from the get-go, with just one mean reversion kind of thing here. Meaning then that in a rational world, shorts would be off the table. And it would be longs only. This would be a likely spot with the VPOC migration up for a long, but I have no confidence in that trade, especially this time of the day. Friday afternoon, going into a weekend, into 2 o'clock, would expect profit taking and not a lot of people wanting to hold a position into this weekend. And we'll see. So we have what appears to be relatively correct VPOC migration. So here it is. We test lower, come up over it, test a little bit bounce. So anywhere in here would be your trigger, or this would be the trigger, and long. And now you're at 77 and out of there's a right here is your 80 is your scale. What happened to the screensavers there? I don't know. It didn't seem to want to do right. But depending on where you got in, mechanically or not, that's pretty close to a stop. You know, sweating bullets time. Well, man, not the lack of oxygen yawns. I guess I better crank out a few pull-ups here. The blood flowing. And I have the school run patrol at 1500. So an hour and change. One hour and change. So not much to write home about. There's a risk neutral scale. Now we're in a position where the VPOC, having had the VPOC migration, the mean reversion story is kind of Oscar spiel here because that's the mean, right? So now outside in would be up here, and what the hell would happen down there? Who knows? Oh, there we go. Now it's paying out a little more. I have no clue about this. I don't know enough about options to know. I mean, I know they defend certain strike prices at whole numbers and things like that, but I don't know enough about the details of option trading, implied volatility, and all that to know what the hell to imagine they would be doing. I know triple witching is that they expire, so they got to roll them, right? And that means they've got to protect strikes to keep their premium or not. If they expire worthless, then the guy that sold those puts or calls, whichever it is, keeps the premium. And that's really all I know, and that's not very much. That may not even be that accurate. I mean, to a degree that's accurate, but I know that there's time decay and a lot of things like that factor into it. They say that the smartest traders or mathematician, et cetera, guys are the options traders. And you never know. Well, any way you look at it, we'll have a new micro composite high here. Just gap up, gap down, gap all around. That's kind of not very reassuring to me, all these different gaps, because they're most often revisited. And why do they do that, So 77 to 83. There you go. There's 6 points. So scale and 3. You're sitting on a reasonable profit and scaled. So, yeah. this is one of the few VPOC migration trades that actually fit the parameters as I understand them and worked out that in my recent memory. Here goes those profits if you hadn't taken them. And we're in the 2 o'clock hour. Really hate going into a weekend with a loss. But I hate going into the weekend worse on a bigger loss. So, 2 stops is 2 stops. Certainly not the end of the world, but it's annoying under the circumstances, considering my thesis was exactly correct. It was just the timing that was off substantially. Substantially. Well, this looks like a pretty useless. I should have stayed in bed. I'd have been better off. Anyway, yeah. So here we are at power hour 15. Wander back over here a little bit. Now here's first trade, stop. Second trade, stop. Both longs. Looking for the previous high and the overnight volume point of control. Well, at this point, looking at the close. And look at it, and at that time, the IV was right in here. Okay, so that's where I was headed, what I was thinking. Stopped out both times. We had this little nonsense, and then I didn't, I was pretty pissed, I guess, and didn't handle the losses well or whatever, so I didn't reactivate. But you'll see the outcome. 85, 65, 20 points. that's frustrating when that happens. But I had anticipated the movement of the market correctly, but couldn't have had worse timing. And then didn't react well to recuperate from that when at this bounce right here, as you look back and, this is rear view mirror trading, right? Which is the stock and trade of internet gurus, but certainly not reality. This little pullback here to the VPOC was, I guess, a thing, but I don't trade off the POC. I figured that's diddling in the middle, and I think I talked about that on the stream. So yeah, I don't know what would have happened there, or where I could have said that it makes perfect sense with all things that I would have gotten on this back the right direction. But that's the magic of trading. 25, 30 points in the right direction. And instead I got 2 stops. I'm not sure. I guess it's just me making noise here. I don't know. So I will be killing the stream at 1500. I go get Sam. And that'll be that. Then I'll do the timestamps and all that when I get back for the stream itself. And it will remain public because there are trades, 2 losses, but there are trades. So the way I'm doing it now is I put positive or negative, however many ticks in the title of the stream so that it's easily identifiable. In this case, it'll be minus 48 ticks. And then the timestamps are, in the description, and that's as much as I know from YouTube that's how the chapters get in there too. So, pretty disappointing, but that's the way it is. Really strange. I don't know exactly what I'm doing different or wrong, but I sure need to get it fixed. Previously, I was reviewing some equity curves on a couple of other accounts. Just no problems at all. Consistent, consistently moving lower left, upper right. This thing is lower left to lower right. Lower left to lower right, I guess is the way it's what it would be. Not that that's really funny, but I guess that's how you'd say it. It's 2 stops, right? It's not the end of the world, and but it's, in my opinion, it's something that has to definitely be analyzed and figured out. Obviously, you can't just keep taking stops forever, or 1 or 2 green and then a couple of stops, and then it's just like Groundhog Day, getting no place quick. This is the kind of a day when a closing swing trade could have some significance. It's a Friday, it's triple witching, gap up, go up last couple of days. And would you imagine that there might be some of these longs? There might be an inclination to put the squeezeteria on some of these longs right here. Even, here and here and here and here. There's the week. Monday, Tuesday, Wednesday, Thursday, Friday. Now, I would not be at all surprised for a healthy squeeze at the closing swing trade, which is about around 250, 1450 to 1500. And here we are back at the world famous POC. So, hey, let's everybody diddle in the middle. I guess that might be something that kind of bothers me about the VPOC migration. It is taking a trade off the POC, which is considered by just pretty much everybody is a stupid thing to do, because it's the outcome of every trade is 50-50. The market is random, and the most heightened place where that occurs or is most likely to occur is the POC. Because by definition, it is the most traded, the most contracts have traded at that price so far in the session. So that is retail. That's where traders believe is a fair value at this point. And that's why there's been that's why so many contracts have traded there. And some guy over here is on the TLab has taken this long. He's been waiting for this VPOC migration, trade out, reply, return or recheck, and then bounce. So he's slung. So fingers crossed for him. Hopefully he gets there. day. On the positive pop. Now I'm in a real quandary. My reaction here is to think about, I want to short, mainly because that's maybe just because that's my preference, but I didn't. But touching that VPOC up here at the highs, this time of day, Friday. Now, this fellow that thought was been waiting for this trade, it says he took it. He's following his rules. He says, yeah, and this is the VPOC migration. Context is up. Come back and retest, and he's looking for the bounce. So he's yet to be scaled. I hope for his sake that he does, that he gets that way. Someone else just posted that for the CME or CBOT, I guess it would be, the maximum number of ES options contracts that would expire out of the money are between 75 and 80 as of 1400. So that means between here and here. And that's why they got this VPOC up here, I suppose. And they're going to try to keep it up there. because when those expire out of the money, then all those guys who sold premium are in the money. Which would actually be good information to have way before right now. Somebody asked him when he checked that, but I haven't seen any answer yet. And it's only 2:30. So but that would explain why they pulled the VPOC up here and why they're just holding on to it up here. Not a lot of action, actually. A few stops out on either side of the coin. Don't really know how they would hold that. Creek. So. Tasty. So I think that, so, I don't know what the rest of the dorks have. Well, it looks to me like here we are. And this is where we're going to stay probably into the close, except I don't know when the options expire. I don't know if they have to hold it through the cash close or what that is, to be honest with you. And I don't know the options market times. So maybe they just have to hold the line here until the cash closes 1,500 and all hell break loose. I don't know. Yeah, so 45, I'll get ready. Well, there we go, that 45. I think those might be market on close orders getting ready to go or something. I don't know. Got no idea. There's the scale, however. Not that I took that trade, but, that's how quickly it can move. And this is a real volatile period of time here. So I don't take this trade unless it really starts cooking and a bunch of liquidity will jump in there. I would be sort of hard pressed now with all these levels down here if they start looking lower, which is what they're doing. There's 5 points. 4 points, sorry. That's the overnight VPOC, by the way, not the, this is the current VPOC. Through that low volume area to the IB high. Now what? What are you going to do now? Now who are you going to call? So we're getting absorption, but not a lot. I haven't seen this indicator start to choke down here, where I start getting all the red bars or that warning that says it's aggregating. I want to take I kind of hope it does so that I can get the log in the simple file or whatever they call it and send it over to the bookmap guys. They asked me for that and I thought I did it once, but now I don't find my reply in the email. So if I didn't do that, that's pretty inconsiderate of me. And that's not nice. Bingo. Having no idea why they would miraculously stop exactly at the IB high. Who the hell knows why that would happen, But stranger things occur at the going into the close, My whole thinking about this closing swing trade today would be the fact that they, could squeeze a lot of them out. Now, that little move right there did take out any kind of short stops down to the IB high. And if you look at the case, there's longs. Longs are out. There's longs. Longs are out. So we've got this little bit right through here. I don't know. I don't know if that even makes sense, to be honest with you, but that's my thinking. Boy, they're trading the crap out of things right here, huh? This market options expirations are as goofy as, it's earnings and option expirations and then, reports. And there's a lot of extracurricular activity that drives this market a lot of the time. And that's where the volatility comes in. So that's actually a good thing. But, yeah. Be named. Tight consolidation going into the 55. I would imagine that they may just bam down to this settling area down here, but it could just turn around and zap the other direction too. Notice what's happening over here. Boom, and they could just play it straight out. I don't know. I will watch this with interest. Likely not participate. I've done a couple of closing swing trades that have panned out nicely, but I'm not sure how to study them exactly. So 5 minutes, 6 minutes to the top of the hour. I'll kill the stream at 1500 here, unless, some magical stuff looks like it's going to happen. I've got to get scooting for the school run. And it's Friday, so doesn't look like rain, so that's a good deal. Fortunately, it's close to school is close, about 5 minutes. And damn, now it's not ready to go until about 3:15 or 15:15, so got a little leeway. So 2 trades in the right direction, prematurely entered, or, just early in the market. Both of them would have worked out. They were both longs, and they were down about 60. Well, I don't want to go back and look because I want to watch this trade, but both 2 stops. So I will post leave this stream live or public and put the timestamps or chapters or whatever you call it in there after I get back from TAM. With the outcome in the title, as I've been doing, I figure that's the quickest way to reference it. And some people use numbering system, sequentially, which is a good idea. And I may do that maybe start that. But at the moment, I just like today, we'll have minus 48 ticks, and then a space and risk neutral trading, blah, blah, blah. And then the timestamps will be in the description, which when they're in there correctly, they then are available on the timeline. So, yeah. Come on, boys. I guess those option guys are pretty serious about this crap, huh? Somebody said for the options, the most number of S&P options expire worthless between 75. I think it was puts were at 75 and calls for 80, or maybe it was the other way around so far. And this is supposedly triple witching. So that would be a huge motivation to anybody who sold premium and has enough horsepower to shepherd the market, shall we say. I wouldn't want to use the word manipulate, but, yeah, so that's just a irritating Friday. What can I say? the magic of trading. It's a random market. The probability of the next trade is always absolutely statistically 50-50. Anybody that tells you differently doesn't know math. And that, I don't care if there's been 100 wins in a row, the probability of the next trade is 50-50 because it's a random market, and that's the way it works. So that's why treating this as a business of statistics and probabilities, as I describe it, is really important. I was going to say where I described that. Trading as a business, it's a 1 hour in, exactly. And that gives a real definition or description of exactly the Holy Grail, really, because that is the difference between retail traders and those who, the 90-something% people who crap out, and these few percent of people who do not. That's the way it works. And the work has to be all the real work is done out of trading hours. And then really the trading is just applying the vetted trades every time they present themselves. And the law of large numbers manifests. Simple. See how the liquidity choked in here, or all around just started bracketing off the price. And now we did get one little more perp right up here. One little more migration north. It doesn't mean this thing won't rip to the top side, but we are now at 1,500, and that's the cash close. So they kept it nailed right down between 75 and 80, right into that close. The curb trade, they used to call it, is at 15.15. Up till 15.15, but I have made a couple of trades in this period of time, but I'm always sure that I'm well flat by 10 after, or before, actually, even 5 after. The old theory in the pits, I was not in the pit, but I know some guys who work floor guys or locals, that if somebody was out there trading now, this time of day, it's because they were underwater and they were desperate to try to make some of it back. So they were just out there, a few people out there trying to pick each other's pockets. And that's kind of the mentality that I have. If you haven't made any money by now, or you're in the hole by now, this ain't the time to try to get it back. That's another adage, which is very, very, very true. Scared money doesn't make money. Scared money can't trade. And that's another. If you're desperate or scared, you can't do it because your thinking is clouded. It's bad. Emotions are strong enough, and the chemical releases in your brain from your monkey mind and, FOMO and all that stuff is strong enough that if you don't have fear or pressure from that point of view on top of it, I'm sure there's people who have done that, but they're far and few between, and it's real tough. So there we are. I will end the stream now. Great weekend. Do your homework. Listen to Trading as a Business and see if you can vet some, pick a setup, identify the criteria, and then see if you can identify 50 trades that match that exactly and see if it has an edge or not. That's the homework. With that bit of pontificating, I'll call it a week.